Okay. Can you guys see my screen? I have Thinkorswim open. Can you see Thinkorswim on my screen? Let me get a number, any number in the chat. Okay. Cool. All right. So I'm going to briefly go over, and this is going to be very, very quick, and we're going to go very quick. And I want you guys to hold your questions till after everyone is done speaking. We want to spend a lot of time answering everyone's questions today. So your friendly neighborhood sniper, Huey212, is going to go over support and resistance levels. And then up next, you're going to have Mo Money talk about trend lines. Following Mo, we're going to have S. Dot talking about moving averages and how you can use them to your advantage. And then the boss, JCat, is going to jump in and kind of bring the picture together and use all of these examples to show you how to use them to enter and exit the best and how to manage your trade. I'm going to get started. So I'm looking at AMD on the daily chart. This is AMD, and then this is from the run up from 2 earnings ago back in I believe July. So this has been a pretty hard level for AMD to cross right here. This is the highest high prior to what we've done recently. This is the highest high, and so I'm gonna mark my line there. This is a resistance line for me, right? This is a point of interest. Whenever I do my support and resistance lines, I usually go from left to right, and there's a reason I do that. So I'm gonna go here, and I see like a little point of interest here, so I'm gonna put a line there, right? I see a low, the lowest low that's after this high is here, so I'm just gonna draw a line there, right? And you see, I'm just kind of, I'm not getting exactly on the bottom of the wick or on the bottom of the candle. I'm just drawing at a specific area, and I'm gonna touch on that point a little bit later, right? So we have, so far we have a resistance at 1711, a support at a resistance at 7711, 8711, a support at 7654-ish. And then, we broke out, we tested this resistance here, and then we broke up above it, and we hit all-time highs at, 94. Let's see exactly what it was. Let's see. Tell you exactly what the numbers are. The high was 94.28 for that candle. So this says 94.19. We'll leave it as is. And then we didn't surpass this. We came down from this high, and so that's a resistance. So we came down, came down. Kind of traded around this line, this 76, 72 line for a little bit, right? There's a lot of price action going on over here. We touched a low of 73.7, so I'm going to draw a line right there. We came up, we broke past this kind of level of confluence, and we broke up to back to this level, right? Back to this previous level. It served as a resistance for this candle because it touched it, but then it got pushed down, right? It came, this one opened up and it climbed above it, but then it got pushed down again. This one here opened up above it, but then the sellers brought it all the way down and it closed underneath it. And then we crashed and we went back down. And lo and behold, this level of support held up again. And so the price action never crossed underneath this level, right? So this is 2 times that this support held, right? 1 and 2, you can see where the arrows are. And so from there, we kind of went up, and we see we gapped up here a bunch of times. We tried to test this line again, right? Because this candle here opened here at this level. It went all the way up to this resistance, and then it rejected, and it closed down here. By the way, I know there's a bunch of people on this call who are familiar with candlesticks, and there might be a bunch of new people who are not familiar with candlesticks. And if you're not familiar with candlesticks, then I just want you to, be patient. I'm going to send you, and Jen Wells says your audio is mute. Can you guys hear me? Let me get a 1 in the chat if you can hear me real quick.
I can hear you.
Okay. All right. I'm seeing ones. Okay. So she says I should use the microphone. So my wifey says use the microphone. So guess what I'm going to do? I'm going to use the microphone. So for anyone who's on this call who's not familiar with candlesticks, right? So I'm talking to people who are probably trading on Robinhood or mobile or something. Can you guys hear me? Okay. Let me get a 2 if you can hear me now with this new technology I have.
Verizon 100.
Cool. Cool. All right. So for anyone who's not, and someone said it's better. Good. Okay. Thank you, babe. So for anyone who's not familiar with candlesticks, I made a quick video on candlesticks. It's on my YouTube. So I'll drop the link in the chat. That's the link to my YouTube. Um, it's the first video that you'll see, and it explains the anatomy. It's called the anatomy of a candlestick, and it'll become really clear for you. But for now, pay attention to this. Thank you, Carlos. Thank you for for the comment. And guys, if you see like anything wrong with my videos, please give me the criticism so I can grow and become a better person, a better content creator, a better trader. Someone who's going to be a better resource to you all. So yeah, getting back to this. To this price action. So we bounced up from this support right here. So this is, to me, is a strong support. We jumped up, we tested this line, it rejected, right? Came down, didn't break down below this. I can technically draw a line here, but I'm not, I'll draw it just for shits and giggles. Excuse my language, but it is what it is. So we went up, right? And then we came back to this level. You see this candle right here, tested it again and then rejected. And then this green candle came up and tested it again and rejected. On this particular candle, we opened up above the line. I'm going to zoom into it so you can see it. Right here, we opened this candle, this red candle. We opened up right above that line. And then, we opened up here, way up here. And then sellers pushed it all the way down. And then buyers bought it right back up above the line. So the buying pressure on this was good. This was a nice, it's a red candle, but the buying pressure was solid for this particular level. Because what that illustrates is this line here that was a previous resistance, right? And I'm just going to place ovals on it so you can see exactly what I'm talking about. It was a resistance here. It was a resistance here, right? We gapped up over it, but we came right back under it, right? It was a resistance here. It was a resistance here. And even here 2 times, right? This time we came up above it. We opened above it. We came down underneath, and then buyers pushed it up. That's a sign of strength for this particular, previous resistance now becoming support, right? So it was resistance all this time until it now became support. So the next day, AMD opened up above that line, and it looks like it came down, right? It sold off a little bit, and then buyers bought it all the way back up, way back up. And actually, November 30th. Let me see something real quick. I'm gonna derail this for a second. November 30th. Let's see. Something happened on the 30th. Was it this? No. I think QCOM or NVIDIA, one of them had, I don't know what it is. But anyway, there was some sort of catalyst that brought AMD up on this day, right? Whatever it was. And you can see by the volume, right? The volume was crazy. People were just buying it up. I guess they were waiting for it to get above this line. So once it got above this line, they bought it up. And then the next day, it kind of had like a doji, right? A flat day. And then the next day, it opened up within the range, and it kind of tried to get above this previous resistance here. And it did for a while, but then the sellers pushed it down. This was about to be a 3-bar play. If anybody ever heard my voice ever at any time in relation to options in the stock market, then I'm heavy on the 3-bar play. So this actually did create a 3-bar play, but it failed because it was brought all the way back down. And so you can see the price action on this line here, which is a previous resistance from September 2nd, right? It's still in play. So it came up, pushed down. Try it again, came up and pushed all the way down. Open green, came up, pushed down. Over here, it kind of opened up above it, but then the sellers brought it all the way back down. So this is the line of interest. Until we get above this line, we're going to probably trade in this little channel here, between this resistance and support line. So as you can see, support is just like kind of like the people in your life that are like really good to you. They lift you up and they hold you up, right? When you're down, right? When you're down, your friends will lift you up, right? And the resistance is like kind of like the glass ceiling, right? You're trying to bust through that glass ceiling and live your best life, right? And have your stock value be up very high, and the resistance is holding you down. So that's how I think about support and resistance, right? The support holds you up, right? Just like it did here these 2 times, and the resistance pushes you down, just like it did here a bunch of times, right? And just like it's doing here now. And that's it. I mean, it's really that simple. I'm gonna go to a different I'm gonna show a couple of more examples so that kind of just so we can drill it in. Let's see. There was one that I saw. I actually haven't watched this. There was one that I saw earlier today that I thought it was pretty interesting. So I already drew the lines on this one. This is the daily chart on this company called KIN, K-I-N, which is a therapeutics company. Can you guys see my screen pretty clearly? Should I zoom into this a little bit more, or is it okay? let me see what you guys say in the chat. Let's see.
You're good. I can see
Okay.
it.
Okay, cool. Perfect. So, everyone knows what happens here, right? This was back in March. Everyone knows what happened. So now, if I were to get super granular, right? Let me see if I can do it. Let me zoom in a little bit better. So if I were to get super granular with this, and this is the point that I want to make with this particular chart is this, right? The low of this, the very, very low was 311, and 311 is way down here. I have my line at 355, right? So the reason why I have my line there is because, this didn't reach 311, this didn't reach 311, these didn't reach 311, right? These for sure didn't, right? Over here, it went kind of low, but then it came right back above, right? And it's kind of like just respecting this line, but also just this area, right? So when I do support and resistance, to me, when I see my line, I think of it more as kind of an area. So I'm just gonna draw it with this blue shade. Can you guys see that blue shade, or should I change the color?
Perfectly visible to me.
All right, cool, perfect. So I just drew my line here very quickly, right? Because I don't want to spend too much time with this. You don't want to get caught up too much in perfection, right? Perfection is the enemy of progress, right? Progress over perfection. So it didn't come. I didn't draw it down here, right? I could have drawn it down there, but I didn't because. Excuse me. Hold on. Let me just get it. Let me get my screen right real quick. There we go. Okay. I didn't draw my level down here, and I could have drawn it at the bottom of that wick, right? But maybe I wouldn't have anticipated this bounce here, or this bounce here, right? Or like everything that's going on over here, or this bounce here. I would have been waiting for it to come down to the support, to test the support, to then find my potential entry, right? And I didn't do that. I didn't wait till down here. Once I see confirmation of a green candle, I know that, okay, there's the bounce, right? Here's the bounce, right? Or here's the bounce, or maybe down here is the bounce. So you want to focus more on the areas, not so much on the actual physical line itself. Just like with AMD, it's an area, and I'm gonna go back to AMD briefly so you can see the point here. The line is at the top of this wick on this candle, right? But look at this area. Look how it reacts to the area. It just keeps getting flushed down from this area. It reached way up here, but it got flushed down. So like the area, and if I were to throw anyone who's on all of my Thinkorswim heads, if you use a volume profile, then you'll see you'll see an extended shelf. Well, not really, because there's not a lot going on here. But anyway, I'm going too deep. So yeah, so I drew my support at. I drew my support at this level, anywhere on this level, and I drew my resistance up here. The resistance happens to be a little bit more precise just because that's the way that it worked out, right? You see it rejected here, rejected a bunch of times over here. For me, and I mentioned this, actually, let's get into the next ticker, and then I'll go into my spiel. The next ticker is one that we were looking at today in Rico's Way Mastermind Group, right? There was a point in time where everybody was on SPY, and we were just chopping it up and like getting an idea of what SPY is doing. So like these lines that you see here are all previous supports and resistances that I drew from back in this time, back in September when everybody was getting clapped. Today we were talking about this area here, which is today's 5-minute chart. If you guys want to call, then this is pretty fresh in your mind. So I'm just gonna zoom into the actual price action for the session, right? From 9:30 to 4 o'clock. So it opened and then it dumped and then it bounced and it went up, right? And then we started going. And I was pretty bullish on SPY today because of the emergency authorization for Pfizer's vaccine. Although I think some bad news came out for them overnight. And also I'm not married to bullish, to the upside or downside. Like I just play whatever the market gives me. So we identified, and I'm going to do this. This is just to drill down the point one more time. So let's look at this candle. Correct this bar. Can you see these numbers, guys?
Yep.
Okay. So this green candle right here opened at 365.76, It went as high as 365.92. It went as low as 365.57, and it closed at 365.81. So now I want you guys to tell me in the chat, right in the chat, what number should I draw my resistance at? 365.92, I see. What else? 365.92. Okay, what else? Someone said the high. Okay, someone said 365.57. Okay, someone
And bro,
said,
I didn't know we were gonna get quizzed.
I mean, I want to make sure you guys are awake. It was a long day. I want to make sure you guys are still awake. Look,
I'm fucking with you,
365.81.
man.
No, I know. The close. Okay. By H, I'm assuming you guys mean high. Okay, so let's do it. Let's see. So I'm seeing all kinds of mixed numbers. So let's just do it. I'm gonna zoom in on this candle right here, this one right here, right? And I'm gonna draw my levels. I'm gonna draw it at the very high. I'm gonna draw it at the close. I'm gonna draw it at the open, and I'm gonna draw it at the very low of that candlestick. I'm gonna zoom out so we can see the rest of the day, right? So these are the levels for the candles. So now let's chop it up. It went down. It was in a clear downtrend. It bounced right here, right? So you know, there's an obvious possible support. I'm just gonna draw that, right? It could be down here. It could be up here. It could be up here. Whatever. It's in this area. It bounced and then it went up, and then it got back to these levels, right? So now let's zoom in over here. This is the area of interest right here. Okay. So right here, I like this. You know, this was strong to me. This was a sign of strength to me because it put in these green candles, then it consolidated, right? It rested. These are resting candles, and then it put in this big ass green candle. That means buyers said we're ready, and they bought it, and it just blasted, right? Big ass green candle. It blew up above this 365.56 number, right? It just blasted right through it, right? The next candle opened up here at 365.71. It went up as high as, you know, the top of this is 365.95, and then it got pushed down all the way down, you know, down to back to 365.56, and then buyers bought it back up, and it closed lower than it opened. So these are all these levels are valid right now. They're all valid, right? This next candle, you know, opened, went up, got rejected by this 365.76, got pushed down. Next candle opened up below, went up above, and got pushed down, right? So now it's in this area. This candle opened here. Based on the fact that this is a red candle, this candle opened up, came down, went up, closed here. This one opened and then came down immediately, right? Probably buyers went, bought it up, and the seller sold it off. So now these levels, this could have been a potential from here. It could have been a potential resistance line, right? This lower line right here, but over here, it's serving as support, right? It's serving as support. And the reason why this is the bottom of the candle, but this might be a valid resistance only because look how it got pushed down, right? Look how this candle reacted to it, right? And I'm just gonna chop it up, and I'll let you guys know which one, how I would do it, right? And everyone does it differently, and I'll explain why that even matters. So look at this candle. This candle came and blew up above all of them and closed up above the high of the day, right? Which is 365.92. This one kind of tested it as support, tested it as support, tested it as support. I think, I don't know where S. Dot got his entry here. Let's see. Oh, I think he got his entry down here, right? I got my entry on this candle.
Mine was right at 1531.
Yeah. Okay. So you were right here.
Yeah.
Yeah, you were right here. Yeah. The best entry was right here, bro. And you take this and you write it up these two candles. So we see how, you know, it blew up above this area and it kind of tested it as support a bunch of times, but then it just flushed, right? And then we found like a little bit of support down here, right? And then it came back up, and then it traded up above pretty much all this area for a while. So now you see how the price action acted with these lines, right? So my resistance, and I'm going to clear my drawing set entirely. My resistance would be right here. Why? Because I know that there was some trades that happened at this level. And the reason why that matters is like it came in and got rejected here, got rejected here, got rejected here, got rejected here, you know, supported here, supported here, supported here. So resistance became support in this area. And then it flushed, then it reversed, and then it kind of acted as support here. Even though the candles closed underneath and opened underneath, it still came back up and above and traded above this line. That's me personally. You know, and so the real thing that you guys need to understand, and if you were on the call today, then S dot went over it, and I'm gonna go over it again. Is, you know, what you guys need to understand is that this doesn't have to be a precise tool, right? Basically, if whether you draw your line up here or you draw it right on the body, right? That's how I would draw it. One of those two. You know, the top of the body or the top of the wick. What you want to drill down is that when the price action nears this area of resistance, we know this is a resistance level based on what we saw on this candle and on, you know, on this candle. We know this is resistance. And so when the price action nears this area, somebody who entered on this reversal is probably going to start taking a profit by the time it approaches this area, because this area was a previous resistance. They're going to take it before they take that little L on that red candle. They're going to take it on this candle, right? The less advanced traders will probably take it on this candle, and the very inexperienced traders will probably take it, you know, on this candle. And some of us will probably get in, you know, we'll start thinking about getting in, you know, like it retested here. It showed strength because it didn't come down below this level here, right? So it was like a nice resistance, a nice support, excuse me, here. I'll zoom into it so you guys can see a little bit more clearly. It rejected, but then we didn't retrace way back below this candle, right? We only retraced a little bit, and then we turned around right here, right? So this is the level of support. You know, really what you want to do is you want to break, and I'm dipping a little bit into JCat's water here, and I'm gonna let JCat really like dive into this, but you want to get the break, and you don't want to get in on the break like I did. You want to get in on the retest, right? After you see a retest and then close up above and then open green, that's your entry if you're bullish, right? And on this trade, you would have lost if you had a stop loss. You would have set your stop below the entry, and you would have got stopped out, and then you would have been out like $5 or whatever, or 5%. So you want to take it on the break and the retest. You know, the break of resistance now and the retest as support, right? And if I'm going too quick, guys, obviously, you know, I know I'm blowing through this. I want you guys to come with questions. Make sure you're writing them down.
I got two things for you, Huey.
What up?
Huey, what is the phrase that's used when a support or resistance line is encountered? What's the generally how when people are watching videos or reading, what's the word in particular? And I apologize if you don't know it, and I'll share it if you don't. But
yeah, just go ahead and share it, bro.
So one of the things you'll hear and read when you're talking about when Huey's saying, you don't have to make it perfect. It doesn't have to line up to every candle top, et cetera, but you want it to go through as many places as possible. What you're going to hear and what you're going to read is going to be the phrase reaction. That is a reaction to the resistance. That is a reaction to the support.
Right.
And that's just the one little piece that I wanted to throw in there. And the second thing is several people have DM'd me asking to have you plug in your laptop because they don't want you to cut off.
Thank you, guys. You guys are the best. So yeah, thank you. That was a great point. So this red sell-off right here, right? This bearish selling pressure right here is a reaction to that support line, right? So they saw that, I mean, that resistance line. These people, everyone on the market who got in, even on this candle, saw that there was a potential resistance here, and so they reacted to the resistance by selling it, right? Same thing here. Like, actually, same thing here. You see how we came down, and then this level served as a support previously for this candle. So we came here and people reacted to that particular level and said, this is a support, so let's buy it. This is a good place to buy it, right? So that's what matters when it comes to technical analysis is drawing whatever you're seeing in the market on the charts, a million other traders are seeing. And we're all reacting to it in different ways, right? Some of us are gonna take profit when it reaches that line, right? Some of us are going to wait for the retest of the break of resistance and a retest of support, and then confirmation of a green candle if we're bullish, to then take this call to the upside. You know, and that's what to Mo's point, that's the reaction. And like, you know, I'll show you very quickly how I draw these, like, and it doesn't have to be perfect. Again, it's just like, and I'll do it like this, just so I can drill this part down. You know, it just has to be an area. It's got to be an area, right? This can be a support, a resistance level, right? And this whole blue shaded area, you see how much trading occurred there. You know, rejected, pushed up, support, and then came down and pushed up. It's just a level, right? And we don't have to get too granular with it. Like, and you guys don't have to overthink it. And that's it. There's your support. There's your resistance, right? Here's another support, right? Hold on, let me draw it. Let me draw this a little better.
Yeah, and while you're doing that, Huey, like I want to jump in and
Yeah,
really
absolutely.
reiterate that they're all just levels. Like, so I know you're looking at a chart, you're seeing numbers, you're seeing exacts, and so you want to make it as exact as possible. But we're not algorithms. We're not writing programs. We're humans and we're looking at this. And honestly, humans are writing those algorithms anyway, so there's like a human element to it. But for us as retail traders looking at charts, like these are levels. So you've got to give everything a little bit of breathing room. You've got to understand that, you know, it's not going to be 366 and 3 cents and that's it. You know, there's no line in the sand. You know, where you draw your line has to make sense, but it doesn't necessarily mean that that is it. If, you know, you can't make your decision on if it goes to 366 and 4 cents, this everything's invalidated, or this is not a resistance level, or this is not a support level.
Right.
It's these are just levels, and you've got to give, and this is like the art of trading and the art of technical analysis, that over time and just understanding on what you're looking at, you'll get to, but it's much better to just kind of reiterate that into your head early on, that none of this is exact.
Right.
It's just there, you have to finesse it a little bit.
Yeah. So if you guys ever see my charts, when I do my charts, I'll use the shaded areas and then I'll draw my lines within the shaded areas, because the lines. So like, you know, this 365.93, it's the very top of the wick, but this is just an area of interest for me, right? And to Mo's point, it's going to react, and to JCat's point, it's not precise, but it can be, but it doesn't need to be. And you just have to think about how other people in the market are going to react to it and predict their behavior and try to be sharper than anyone else. Like that's pretty much it, guys. I'm gonna take a request to do one level, one support and resistance level on the first ticker that I see in the chat.
While you're doing that, part of doing levels as well is we want everybody to process as much information as fast as they can. And if you're worrying about every penny, then you're going to slow down. Whereas if you have these areas and you're like, okay, it's approaching the blue area, I'm out or I'm in, you'll be able to move a little bit faster and get through your trades.
That's right. Thank you. That's right. That's great.
And just one expansion on JCat's point, getting it down to the exact penny, and this also piggybacking on Estad's point, getting it down to the exact penny may actually work against you, because the algorithms now know. The algorithms are out there trying to beat you just like you're trying to beat them. And so fudging the numbers either direction is going to actually help you play, you know, you've heard me talk about this before, it's going to help you play game B against the rule makers. So keep that in mind also. Not being exact works in your favor multiple different ways.
And guys, just to reiterate this, it's not, you know, it's you against the market makers. The market makers are the ones who make the price action do what it does, and we're just reacting to it. And so, you know, you're fighting against algos, and these algos are much smarter than you, and the people who coded them are also much smarter than you and have more money than you, and they're out to take your money. So let's not make it an exact science. Let's just do the best that we can, right? And let's not be too hard on ourselves either. So this is Stitch Fix. This is a perfect example of support and resistance. And actually, I'm happy that I did this here. So I drew this support level here, but the reason why I like to start from the left to the right, is because this support was actually a previous support over here, right? So instead of drawing the line twice, I could have just drawn it once here. So that's why I like to do left to right. And yeah, I mean, that's it. I mean, this is trading in a clear channel today, and it broke up above it and in the aftermarket, and it looks like it wants to try to trade above it. And we'll see what it does on Monday. You know, and that's how I would draw my level. Let's get one more, and then I'm gonna hand it over to Mo. The first one that I see, I'm opening my chat now. What do I see? PFE, guys. PFE? No. I'm not doing PFE. Give me another one. Give me another one. SPC. Okay, we'll do SPC. I'm not doing PFE, guys. So you're using support and resistance as an indicator to buy, sell. Would you also use volume, RSI, and MACD? So do you guys want to chop that up while I draw my levels on this?
Yeah, you kind of use as many indicators as you're comfortable with. You want as many confirmations of what you're seeing to be true. So if the MACD is swinging on you and you're breaking through a resistance at the same time and RSI is low and volume shooting through the roof, it's probably time to jump in, right? So you kind of want to use all the tools in your toolbox to get as many confirmations on the move that you can get.
Yeah, and you can use support and resistance to base trades, and I'll go over that later, how you do that. I mean, it's fairly easy to just see as we're doing it, but you don't want to use just one thing, you know. So I don't personally, for me, I don't use RSI and MACD as much as I used to, but I'm not going to say that it's not valid. It's just for me. But you don't only, you know, to piggyback kind of a little bit on what Estat was saying, is like tools in your tool belt. You know, you want to have as many as you can, but you also only want to have the ones that are valuable to you. So, you know, Chris, to answer your question, I don't use RSI, MACD. I for sure use volume, but I'm not only using support and resistance to make trading decisions.
So here I have, you know, so the price action went up, rejected, came down, found support. So resistance and support on these levels, right? It broke up above this resistance. It went up and it found a new resistance up here. It came down and tested this resistance as a support. It found it and then it bounced. Rejected, broke up, new resistance. Did it try to test as a support? It did. It failed, came down, tried again, failed, came down. This is like almost a 3-bar to the downside right here. And then failed all the way down until it finally found support here. And I'm sure this support is from, you know, back in like a week ago or last week or yesterday or something, if we go back. And so that's the importance of like also going back in time to see kind of what the price action did yesterday and the day before, so you can have your levels, right? Inside days, when you're on inside days, then yesterday's levels are still valid, right? If I look at the lower line, I have, you know, it served as support on these two, you know, these two candles right here. If I look at the upper line, it served as a resistance for these two candles right here, as well as these two candles right here. So that's why you want to always start from your left and go, and that gives it validity. Like this is a strong resistance to me because I see that it's a resistance here, 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 and here, right? So I always, when I'm drawing it, I always start from like the larger time frame, such as the day, or even the week. If you know there's a certain chart pattern, I'll go to the week, go to the day, go to my 4-hour, and then go down to 30, 15, 5, right? And by the time you get to the 5, a lot of these are already valid, and you don't have to redraw. And that's it, guys. I mean, you know, you just see how it reacts. You know, this one here might be super weak. It's relevant because there's a pivot. It's a small pivot, and then it traded a little bit of a channel. It held up, and then broke down. That previous resistance became support and then became resistance again, right? And that's it. I mean, I don't have anything else to say, so I'm just gonna pass it over to Mo. I'm gonna put Mo's social media for anybody who is on here who doesn't follow him. And then as the guys come on, I'll you know, I'll clue you into their social media. So I'm gonna make him the host real quick. Okay, Mo, it's all yours, bro. Let me stop sharing. All yours, my brother.
Okay, let me make sure I'm sharing the right things.
This is Mo's Twitter, so follow him on Twitter. Flood his DMs.
And I just signed up in Instagram today. It's naked, but it's the same thing at Instagram too.
And Carlos, I'm gonna put my social media as well. Thank you. My Twitter and Instagram is just this, guys. And I don't do so much charting on my IG. I think I'm gonna start soon, but my Twitter is probably gonna be like, you know, technicals and charts and sentiment, et cetera, et cetera. It's probably gonna be a takeover soon.
I apologize. Can everyone see my screen?
Yes, sir.
All right. One of my most popular requests that I get is Facebook a lot for some reason. A lot. I guess there's been a Facebook play that a lot of people have been stuck in this week, and it's been one of my more popular ones. So I've had this drawn for a few days. This is the 4-hour chart with Facebook, and it's one of the types of trends. So there's 3 types of trends, and I wanted to kind of show the power of zooming out on the chart and zooming in. And sometimes, you know, I know you've heard Rico talk about it. I know you've heard all of us talk about it. Different types of charts will lie to you. And this is one of those instances where, you know, the chart where zooming out will stop you from being lied to. You know, you can see, you know, oh, that's not a breakout. This is just part of this larger consolidation. Now, you know, I call this coiling, but the phrase is also called consolidation. It's called channeling, and those are very specific terms that mean different types of price action. But what they all refer to, without getting into their specific patterns, is they refer to lower highs and higher lows coming together to form a point. And you can see on my chart here, can you all see the mouse pointer that comes along with, like I'm moving my mouse?
Yeah.
Thank you. So you see they come together at this point here. And so you can reasonably assume that this consolidation trend will continue. And to Huey's point, there are a lot of different ways you can draw support and you can draw resistance. And one of the things you want to do when you see a consolidation pattern like this, or a wedge, is you want to also have these larger trend lines in these patterns, so that you can see not just these flats. Actually, I'll go to a horizontal line, excuse me. These lines like this, but you also have, because this would very theoretically be or very reasonably be considered a resistance in here, as it, you know, it came up, it reacted, bounced down, came up, tested, reacted, you know. And again, the same thing along this upper trend line here, where the price rose, it touched this 291.59, and then bounced back down, started a new downtrend, came back up, tested the same zone again. And this is part of, and unfortunately I can't draw a diagonal box very easily. I don't know how, I've never done it on this platform. But again, we're talking about this exact zone. You would know that once it got up into here, that it was going to come back down. So if you had some sort of buy signal, or we're looking at call outs, and somebody told you to buy when the price was right in here, you'd be like, oh no, it's approaching that wedge's resistance. So you don't want to get in there. So this is the first thing I wanted to show you, is that wedge, consolidation, or coil. They all refer, technically this would be a coil. Technically this whole thing would be a wedge, and the price action is consolidating. So let's get over to SPY. And if you look at SPY, the SPY chart actually has all 3 things on it. And so the first is what is considered a pretty solid downtrend. You had lower highs, lower lows, and it's a downtrend. And then somewhere around in this zone here, in the reason why I'm not drawing these lines actively is because I'm kind of to Huey's point, my own point, and everyone else's point, being too exact, it will slow you down. And when I'm drawing trend lines, I probably am too slow. So I'm more of an eyeball type in terms of trends. I can, you know, I zoom out, I zoom in, I see, you know, I go like this, and I can see, oh yeah, overall, this is, you know, this is pretty clearly a downtrend. I don't need to get exact. I can see that this is coming down with my eyes. I don't need that. And this is only 2 or 3 days. This isn't a large period of time like these usually look.
Yo, Mo, real quick, why don't you draw that same resistance line that we were talking about earlier?
In SPY?
Yeah.
I was trying to look at that too. Did we fill that gap perfectly on that left side? That I didn't even realize.
Oh, you took your eyes off the screen, bro?
Yeah, I didn't even realize there was a gap to the left. It almost looks like we were pretty close to filling it perfectly.
Close.
Yeah, pretty close.
Pretty close.
Yeah.
Yeah, so what they're referring to is this right here. This is a gap down between the after hours session and the early morning session. Yes, my dog is snoring again. Sorry, folks. She is good at her job. So um, I don't know how much of that you can hear. I'll go ahead and put a hand up. So
We can't hear it, bro.
somebody can. I'm getting DMs, but again, we have another consolidation. And this one was a little less perfect than that Facebook consolidation. You're looking here at the 5-minute chart, right? And so you can see that this upward, these higher lows is actually sharper than the lower highs. So you can, I'll let JCat talk about that. Sorry, that's his part. However, oh fuck it, I already said it. Excuse my language. So you can read when you see.
Go for it, man. Go for it.
Yeah, sorry. And JCat can back me up on this and probably show substantially better examples. You can see when the higher lows, or yes, the higher lows are at a sharper angle than the lower highs. It is reasonable to assume that this will end in a bullish break, not a bearish break, because the highs are not decelerating at the same angle or same rate that the lows are accelerating. And so again, clear uptrend, clear downtrend, and you can use these as secondary supports or larger supports inside of a trend to help gauge when and where to exit. And again, I'm sorry, I'm cutting into other people's parts here. The last thing I wanted to cover in terms of trend lines, which is going to be extremely helpful and powerful, and I know Huey has pointed this out before, which is getting into the trend lines on the volume charts here. This is the volume indicator. This is not a volume profile. I have my volume profile turned off, which I'll show you guys because I pay for the extra data here. I get all of the data inside of this volume profile. So it shows me the buy orders versus the sell orders. The sell is in orange and the buy is in blue. But coming in there, and so when I'm, you hear me talking about those, that's where you're seeing that. But again, getting into this volume trend here, and one of the other tools that some of the platforms provide is an average
volume. Nice.
and so this is kind of the trend already. This is false though, because you can see it says it's in an uptrend when it is very clearly in a downtrend. So you can't always trust this thing, but in here, you may not be able to eyeball, and I apologize. You may not be able to eyeball right in here whether this is just choppiness or if there's a larger downtrend going on. But the average is pretty good at showing you, no, this is flat. So sometimes it will lie, but it overall it will tell you what's going on. And again, you can see it's a little late to indicate that it's the volume's back in an uptrend, but that's another thing. Again, you can just obviously look and see this is an uptrend, but you can look at that and you can match that in the price action. You can see as the price is increasing here towards the end of the day, which is really weird because SPY actually trades all the way out into here normally, like even for everyone. So, and can anyone call out one more chart? We'll do some trends on another chart.
Tesla.
Sure, why not? I'll have to clear. Oh, I don't have anything scribbled on Tesla today. I was kind of out of Tesla. I believed Rico, and the first thing I'll do is I'll show you the volume. Pretty clear downtrend through the rest of the day. There's obvious trends inside, and you can look at that average to see that. But that's a pretty clear downtrend over the day. You could probably even do this twice, like right here and then do another one here to there. Actually, that goes up, but
Well, that's a 5-minute chart, right?
yes, this is a 5-minute chart. And gosh, this thing is ugly. Why is this? Wow, just these shadows or wicks on these
Yep.
candles is really messing me up, man. I haven't seen anything like this. So, and as you know, as you all know, I've only been trading for 5 months at this point. So this is, this is all raw learned from me in the past 5 months. So I would come in here, I'd grab this and I'd look there, and actually instead of that, what I'll do is we'll chart out the rest of the trend so you can see again. Looks like Tesla is kind of in a consolidation again. See, I'm too perfect with mine. I need to get better about fudging. And so, you don't have to do this to draw it to a point, but I'll leave why I do that open for the rest. Another thing is to check your platform when you're drawing these trend lines. TradingView is available for free, and what I'm showing you in terms of trend lines and stuff is available for free, but they do limit the number of drawings you can do, and they do limit the number of indicators you can turn on if it's the free account. I think I know Thinkorswim has these ranges and these tags where different prices are, so you can see like this starts here, and it gives me the indicator where that starts, and it shades the whole area there, and it's also got the current prices labeled. But again, remember I was talking about the angles. So we see the lower highs is at a substantially greater angle. And actually this probably should be there. Lower highs is at a substantially greater angle than the higher lows. So it is reasonable to believe that when this does actually break out of this consolidation here, that it's going to break downwards, not up. But Tesla don't care and will do whatever it wants. One last thing I wanted to cover with the trend lines is there's escalations to trends. Like 2 touches is considered a trend. So you'll see I have 1 touch here and 1 touch there. That's the trend, right? If this were, say, if I were to start drawing this trend here instead, and instead come across this and across this and across this here, if I can get it. Yeah. And so I have 1, 2, 3, 4 touches or reactions to that trend line. At 2, it becomes a trend. At 3, it becomes a strong trend. And for me, before I treat a trend line like it is an external or secondary resistance, it needs 4 touches in order for that to really be a trend. Now, there are some actual trading patterns and trading strategies based off of 3 and 4 touch trend lines. I'm sure JCat's going to go into that, and that's kind of his bread and butter. So I don't want to get.
It's his favorite.
Yeah, that's like his thing. So I don't want to go any deeper than that. But I do want to say 2 is a trend. You need 2 touches to draw your trend line. That's it. You just, whether it's at the top of a candle or whether if it's at the top of a wick. But generally, you want to draw the trend lines, the wick to wick. Okay, you don't want to, you don't necessarily, because there's no wick on this candle, it's perfectly fine to come across the top of the candle. But you see how I'm drawing these from the top of the wick to the top of the wick, from the bottom of the wick to the bottoms of those, well, kind of the candles and wicks, again, very heavy bodies. Also, I have gone in and chosen to use the thicker lines just so it helps me break my habit of getting perfect on each one of these. So 2 is a trend, 3 is a strong trend, 4 is support and resistance. And that's it from Mo Money. I will go ahead and stop sharing.
Thank you, Mo. That was really great, very sharp, as always. And if you guys aren't part of Rico's Way Mastermind Group, Mo is the voice on the mic, and he navigates us through all the chop and all the printing that happens on a daily basis there. So that is Mr. Mo Money. So I'm gonna hand it over to S Dot. Where is Mr. S Dot on my screen? Here he is. Okay. Oh, Mo. Actually, hold on. Give me a second, guys.
What's up?
So no, it's okay. So I see some questions in the chat. Somebody, Adrian asked about. Let's see. Oh, J Cat already got it. I'm slow, guys. Sorry, we've been in front of screens for like what, fucking 12 hours today so far. So let's see. All right, S Dot, I'm gonna make you the host.
Alrighty. So as we're getting this all set up, a little about me. I've been trading commons for 12 to 15 years. I just started trading options in April. So that's how I really got into my technical analysis. So everything you see, I pretty much have learned in a short time frame. I'm going to go over moving averages, like Huey said, because moving averages aren't something you necessarily do yourself because it's all calculated within your platform. Mine's going to be a little more like a class. I'm going to give you a PowerPoint, show you how it works in the chart, and then send you on your way. So there are two types. Can you guys see my screen first?
Yes, sir.
All right. So there are two types of moving averages. There's simple moving average, which they call the SMA, or you might just see it as a MA as well. Webull says MA, Thinkorswim says SMA. Not quite sure about the other ones just yet. And then there's the exponential moving average, which is the EMA. So the simple moving average is just the average closing price of the period chosen. So if you choose the 20 SMA, it's the closing price of the last 20 bars that you see, no matter what time frame you're on. It's just the 20 bars in that time frame. And like I just picked a random number, the 136 SMA is the average closing price of the last 36 bars. So when you're looking at it on a daily time frame, the 20 simple moving average is just the average closing price of the last 20 days. And when you drop down to the hourly time frame, it's the 20 simple moving average is just now the average of the closing price of the last 20 hours. So you can do that yourself by taking whatever time frame you're in and multiplying the simple moving average. Hold on, that doesn't even make sense now that I'm looking at it. Anyway, take the closing price of the last 20 bars, add them all together, and then divide by 20, and that will give you the simple moving average for the 20. And then same with the 136. You would take the last 136 bars, which nobody's going to do, so we're glad we have platforms that do it for and add them all up and divide them by 136, and you're going to get that price for you. So on a chart, you'll see I haven't used Webull in forever.
Oh, look at Webull. Let's go.
Yeah, I figured we might as well get a little bit of everything for everybody. So right now I have the 9, which I can show you guys. Go to edit indicators, and you would just go to moving average and style. And I have, it says the 5, but I think I changed it to 9, 20, and 200. Nope, I still have it as the 5. So I use the 9, 20, and 200. That's what I use on all my charts. I really use the 9 EMA, but we'll get into that. So as you can see, here is the 5-minute on Kin. So let's go to 5-minute on SPY. Jesus.
Yeah, Kin is such an ugly chart, but it was such a good example of like support and resistance on a larger time frame. Nobody play Kin. This is not financial advice, guys.
Yeah. So you can see that the lines are real smooth because there's no, it's just adding up closing prices. So when we're looking at the 9, which is the blue, we could literally just take the closing of the last 9 bars and figure out where that line's supposed to be. Mm-hmm. And as you see, they kind of, the shorter time frames, like the 9 and 20, they're kind of giving you a direction of the trend. And the 200 is also giving you a trend, but it's not so much important on the longer time frame. You kind of look at crosses. We'll get to that a little bit later. And then if we were to look at AMD on the daily, again, you can see how the 200 is kind of this nice sloping trend that goes right with the stock. And then the shorter time frames kind of go right with the stock, where the 20 kind of rides nicely on the bottom of it. Now, the exponential is a little bit different because it takes the closing price of that period, but it also puts the weight on the more recent prices. So when that happens, I put this formula here. I don't necessarily care about the formula because I'm not going to do it by hand, but this is for everybody if they want to try to figure it out on their own. But essentially what it does is it takes the last couple closing prices and puts more weight on those so that the price of the actual moving average line reacts a little sharper to the most recent prices. So a lot of people like to use that when day trading because they feel like it's not as smooth and that they're getting better information on the most recent trends. So it's the same exact thing. It's taken of the time period that you choose, and then it just adds to the weight. So the quicker movements due to the weight, sharper movements on the chart, which I just went over. And then how do we use them? We can use them as areas of support and resistance where the price comes down to the SMA or the EMA. And we'll show you. So you can see how like here it came down, bounced, opened up, looks like it bounced a little bit off the 9, started going back up again. And then here it crossed, came back, bounced. So you can use them in support and resistance in that way. Also, there are, to determine the trends, they have like what's called the golden crosses, which is when the 50 crosses up above the 200, and the death cross when the 50 crosses down below the 200, or the 20 crossing over the 200, which I like to use personally. I actually have an indicator on my Thinkorswim for that one. And those, when the shorter time frame crosses above the longer time frame, that's giving you a clue that the trend's starting to get bullish, and vice versa. When the shorter time frame crosses below the longer time frame, you're starting to get a little bearish. So that's how you would use it if you're trading. You see those cross, you know which way to jump in, whether it's puts or calls. And another way that you could do it is you can determine reversals. And when those crosses happen as well, that I was just talking about, that kind of indicates a trend reversal, and or when they start to converge. So let's see if we can find that on the simples here. So we had a little bit of downtrend here, and these shorter terms started converging, and then when they split apart, that's when the trend took off again, right? And then they came together, your trend changed, crossed over each other, and then separated, then converged, and trend changed again. And I think sometimes let's go back to SPY. We might see it better on SPY. Yeah, like on the longer time frames too, that bounce close. You can see where the shorter, where we're in this downtrend here, and the longer time frame was above and the shorter is below. And then when they finally crossed, that's when we actually started taking off, when they started separating. And Webull does a good job of kind of tracing, so you can see the convergence there. And I just realized I never popped the EMAs up to show you the jagged lines. So compared to the, let me just take off the 20.
So I see a few questions here, so we're gonna wait until right after S.Dot's done to address the questions. And these are great questions, guys, by the way.
Yeah, I'm probably going fast. I'm a little tired. I won't lie.
Nah, you're all good, bro. I think you're going at the right speed.
So right now we have the purple and blue line. The blue line is actually the simple moving average, and the purple line is the exponential. So as you can see right here, as it gets to the top, the purple really just jaggeds down where the blue kind of rounds off. So if you were trying to pay attention to the trend reversal, you can tell that the exponential is giving you more of a heads up by shooting down like that it's probably reversing out, and you might want to sell your call at that point. That's why I personally use the 9 EMA and then the 20 and 200 SMA. Because when I'm trading, as soon as I see that sharp bend right there, I know, okay, we're probably getting a big candle, or that big candle is just about finished and we're going to keep going down on that trend. And you can see it there too. And then you can even see how sharp it is down on this end, right? Where the blue is more kind of sweeping and that purple kind of bangs a hard up, and then you're like, okay, we're ready to go the other way. And let's see what I have. I think that's about all I got. This is more educational because you guys don't do anything with this. You just plug them in. You just need to know how to use them. And we can go over that again on another chart. I have no clue what kin looks like, except for what I never even heard of kin. So the 200s are running together. So I'll set this chart up exactly how I would actually look at it. So I can actually explain a little bit better how. Turn that off. That off, put this on. All right. So looking at this chart, like soon as I saw the 20 cross here, I know we're still going down. We're in full bear mode. So I could have easily gotten an alert on Thinkorswim, and I could have taken a put as soon as that cross happened, and I would have had a good $2 move there, $3 move. And vice versa. We're getting close to the end here, and they're starting to converge, right? So when the 20 pops above this 200, I might look for calls because that should be giving me an indication that we're about to go long. Now, I would take that with my MACD. I would take where we are on the chart exactly. If we're right here and that convergence is about to happen, I'm probably going as soon as we get over this resistance. Because we get over that and we have the moving averages changing, I'm getting 2 heads ups on to take the trade.
Mm-hmm.
So that's how you kind of use all the things that we talked about to make your trade and your entries. I think we get a lot of questions about entries, and like that's the most simplest thing. You take 2 or 3 indicators that you like to use, and when all 3 of them say go, you go.
I think that was great. So I'm gonna ask these questions out loud. So first of all, Nikki asked if you can share this PowerPoint with the group.
Yes, I will.
All right, cool. And then King says any way to factor in spikes. So I think like spikes, like so these price spikes that you see like in August, September, and like the middle between September and October, like maybe those spikes. And if that's not what you mean, King, then please clarify.
Yeah, that's hard. Like I personally, like when I do my support and resistance and stuff, for the most part, I kind of stay away from that March stuff because we don't really know what the true numbers are there, right?
Mm-hmm.
Like did the market just close and that's why we got to stop there? Or there was how many meltdowns that they actually stopped the market in trading day? And then I think JCat probably can verify. I think there was one whole day that they just cut the market 2 hours short and was like, fuck it, we're done.
Yeah, they did.
Yeah. So
Yeah,
like
that was crazy.
so
All
we don't
of
actually
end
know
of
what
February,
happened.
March was crazy.
Yeah. So it's hard to take like those big spikes like that into account because that could be anything really.
Yeah.
We know what it is, but as for whether it should fit in our TA, we're not sure.
So Devin asked, is this similar to stochastics? If Devin is, and Devin, are you young and icy? So if Devin is young and icy, then Devin uses my stochastic RSI technical indicator.
And I see. What do you mean?
Say again.
You said young and icy.
Yeah,
That
there's
means
some.
not young and icy.
He's not young and icy. Okay, he said.
Young and icy. No, I'm Devin Davis.
He said, nah, I'm young. All right, so Devin, so it kind of is because S-Dot, can you pull up a stochastic RSI on this?
I think so. I'm not well versed on stochastic, so if
Okay.
anybody is, you're more than welcome to jump in.
So stochastic is a measure of, and maybe JCat, you want to chime in actually?
No, I don't.
Okay, so
Stochastics, no, I do not at all.
So it works better on a lower time frame, on like maybe a 4 hour or something. So stochastic is it's a RSI indicator with momentum built into it, and I'm not super versed in it. I use it. RSI is like literally the very very last indicator that I use, and I also just use it after the fact. Like I use it like when I'm already in the trade, and I say, hey, by the way, like. What was the RSI working in my favor? Yeah, great. Like if not, like whatever, I'm still in the trade, right? So stochastic is a measure of momentum, and so when like for example when the 9 is underneath the 20 and it crosses above the 20, then that shows bullish momentum, and so it's kind of the same thing, right? So if you go to S-Dot, if you go to like the very very bottom where that kind of reversal hammer is,
On the side or over?
on the left. Yeah, and then so if we look at where the RSI is, right, and then you see that the yellow line kind of pops up, and then it pops up a little bit more. That's showing a little bit of momentum, and then once it crosses, so you can see the crosses on the MAs. with the crosses on the actual RSI. So if you go over to the right a little bit where the two MAs cross, right there, and then you can see that the stochastic's about to cross. So you can kind of use it in the same way. Stochastic is momentum, and RSI guys, like some people are like super like bullish on RSI. I'm not. I'm like whatever. It's just like the last indicator. Like I just throw it on my chart because it looks pretty. To be honest, like. And I'm getting to the point where I use price action and volume to tell me everything I need to know. I don't know if that answers your question. If it didn't, we'll chop it up after. So let's see. Shorter time frame, above longer, bullish. Yes, I would say, right, S dot, a shorter moving average is bullish.
Any time frame, the swing would be bullish, the shorter time frame above.
Right. So then let's see. What else? Rico mentioned that he uses Bollinger Bands. Thoughts on using this in addition to these?
I use Bollinger Bands.
Do we want to explain what the Bollinger Bands are? Because they do actually use the 20 EMA.
Go for it.
I don't know the ins and outs of Bollinger Bands. I just know how to use them, to be honest.
Yeah, so it's really not that complex. I'll explain it really quick. The Bollinger Bands are the 20 EMA, or maybe the 20 SMA. I don't know. That looks a little smooth to be an EMA.
It's saying
but the
20 and 2. That's what it's saying.
What? The 2. Well, no, the 2 is the number of deviations. So the first thing is your moving average, and you'll see, that again. Actually, if you do a 20 SMA, and you're right, I was wrong. It's the SMA. If you do a 20 SMA and the Bollinger Band, you'll actually see they overlap. But the 2 is for the number of standard deviations. So if you know statistics, that's basically the standard deviation is how much stuff differs from the average. So basically, if you go one standard deviation up and one standard deviation down, that's going to 80%, if I'm not mistaken, of everything within the range based on how standard deviations are calculated. And then 2 standard deviations is really when you've gone outside 2, you've gone outside where the average range would indicate normal behavior is going to happen. And so that's why the Bollinger Bands are used to indicate bullish or bearish activity, and used as kind of arbitrary support and resistances, because anytime you're pushing up against that Bollinger Band line, you'll see, and if you look at this here, right here, it pushed up against, and it got shot right back down. No resistance. And again, it wasn't on that 20 SMA. It was on 2 standard deviations above. And again, we come back down below, and there's support. So that's how the Bollinger Bands are used, as support and resistance along with the SMA. And as far as I've been able to test, the Bollinger Band strategy in terms of automation is one of the best things you can do to automate your trading. It has a very high win record, I think, of approximately 60% of the time of using the Bollinger Bands. So it's
Can you say that again? The standard deviations part, just that part.
Yeah. So the if you're familiar with statistics, the standard deviation will 1 standard deviation up and 1 standard deviation down will account for approximately 80% of your population. Okay. And so what the Bollinger Bands do is they go 2 standard deviations up and 2 standard deviations down from the 20 moving average. And so what that does is that creates what you can account for as normal behavior. There has not been an event. This is just regular price action. People are buying, people are selling. There's nothing going on. When you see it leap outside, and so the standard deviations go up to 2 to account for not just that 80, but basically 95% of normal activity. And again, you can see how closely right to the left it follows along in there. It really uses that as a resistance. Like that is like you would struggle to draw a better resistance with a pencil.
So the Bollinger Bands are the yellow and the white line, and then the blue one, purple, is the moving
20.
average.
The 20 SMA, and some platforms allow you to configure those. I think on E-Trade It just gives you one color for the lines, and then one for like the zone. It doesn't actually allow you to customize that. But what is
Yeah, you can customize them in here.
yeah, and
Yo,
so
S,
you can customize that all.
yo, S
And
dot,
this is E-Trade or Webull?
This is
is
Weeble that you're looking at here.
Okay.
Yeah.
yo, S dot, pull
And
up,
you can get on. Was
pull
that
up, pull up,
Huey?
pull up VERU.
Yeah, you're gonna see good on that from today, and you might even see a good squeeze. So this is like a squeeze right here, and as soon as it touched that, you knew it was gonna pop based off that squeeze.
Yeah. So the squeeze that he's referring to is like if you look at the top band and the bottom band, and how they're like you can like kind of see the squeeze physically happening. And whenever there's a squeeze, usually there's a pop after. So
Yeah, that's kind of how you play Bollinger Bands. Is you wait for a squeeze, and anytime there's a squeeze, there's usually a big pop. So whichever band it goes to touch after the squeeze, that's usually the way it goes. Sometimes there's fake outs and it drops to the bottom, but usually it goes to the first band and it touches and runs.
yeah. So
That's when I said I kind of know how to use them. That's what I use them for.
Yeah, and hopefully, ideally, on these Bollinger Band squeezes, you'll already see a natural trend. So you can kind of see that this is moving up already. Here, shoot, I'm clicking on
Yeah,
this.
you can see it on the 20 right here. The 20 is kind of going up a little bit, so you kind of know that your pop's going up.
and there's also like some kind of like ascending wedge forming right there where the squeeze kind of started.
Yeah.
So you can see it just in the price action. Let's see. Cade says Live Trader says the price and volume are the only things to use. Live Traders is a fucking boss. He teaches me a lot on a daily basis.
I use mainly price and volume.
Yeah.
I think like Kat said earlier, he uses mainly price and volume. So that's why I preach that volume analysis.
Whoa, hang on. What was
Yo, Satan, chill. We're just doing education.
that? So Ash says, so the squeeze is kind of like a small consolidation. Yeah, I mean, you can see like the area where it consolidated, and if you were, I don't know if JCat S dot, do you think Weeble has TTM squeeze on it or the TTM?
I think it does have that.
I kind of like Weeble.
Weeble's clean, man. It's pretty.
Dude,
I
it's
kind of like it.
easy to
I
use.
kind of like it a lot.
All new
Yeah,
traders.
it's. I'm like, man, I'm paying for something that might not look as good as this.
I don't see TTM.
So, can you just point with your mouse where the squeeze is happening, just so we're clear?
Right here, you see how
So
the
you
top
see those dots? Yeah.
are kind of squeezing together. Where out here they're wider, they kind of squeeze in here.
Yeah.
Yeah.
And
So
then
as that line
it's
tightens
that
and
top
tightens,
band.
or those top two channels tighten and tighten and tighten, that's
Yep.
the squeeze.
Yep.
Yeah, for example, earlier in the day they were nice and wide. They were pretty far apart. The white and yellow lines were far apart, but as the squeeze, then you can like kind of pinch it with your fingers and see like a squeeze occurring there.
And then you can see as soon as it touched that top line, it went.
And then how do you know what direction it's going to go because of the candle?
Like JCat said, you're kind of getting a kind of an uptrend with the 20 moving average right here, the middle line. But also, it's basically whichever way this candle goes and touches the line first. If it touches the top line, it's most likely going to the top, especially if you have the 20 telling you the same thing. And then if it comes down and touches the bottom line, it's most likely going to the bottom. But like if we already have this uptrend on the 20 and it touches the bottom, we might want to wait till we get confirmation that it's actually going that way. But we have two confirmations just in this, really.
Thank you.
All right, I'm seeing some questions about VWAP, but I think I want to get that to JCat.
Yeah.
So guys, in the chat, this is S Dot's Twitter account. S Dot does nothing but drop gems on a daily basis. So please flood his Twitter account, please. He also has a YouTube, which I think he has linked on Twitter. Is that right?
Yeah, that's linked there. And I actually have a very similar YouTube on moving averages as this. So it's kind of easy for me to throw it together. So you can basically get the same exact thing on my YouTube on the moving averages, and I'll post the PowerPoint for people as well.
Awesome, awesome. All right. Billy, it's Bollinger Bands. That's what we're looking at now. So I'm gonna hand it over to and thank you, S. Dot. I'm gonna hand it over to JCat, and everybody. Just prepare to have your mind blown. Um, Hold on one second. And JCat teaches me something new every single day, like literally every single day.
Just putting a lot of pressure on, man.
Nah, bro. Nah, you just a regular dude, bro. You just a regular dude with a lot of gems.
All right. Let me see here. Let's start with. All right. So basically, what everybody else went over, like I don't really have much to add. Like these guys are great about it. So I've got some things on, and I guess I'll start with like support and resistance. Like I don't know, can you guys see everything?
Yes.
Should I go to this?
Yeah, that's it.
It'd be a little easier.
Yeah, that's cool.
So I want to use this one, and I've got a bunch of charts that I already have, and it's just easier for me because I have like it's organized. But to like reiterate like what Huey was saying, like support and resistance, it's like all these spots here, like it's not exact. Like I know a lot of these touch probably pretty close, but like right here, like you just got to know that there's a zone here. And on this chart, probably should have put this gap here, and that would have given a whole nother level, like all down here, where this is just a big zone of support. So if you want to tie this into where to make trading decisions, and I think I had said earlier, like before, like you don't want to just use support and resistance to make trading decisions, but if you wanted to, you could. I mean, if you took at any one of these points, this is Baba, so you're looking at a 15-point move here, another 15-point move to here, another 10, 15-point move to here. You can use them. And the advantage of using them is you've got a natural stop underneath your support. So now you want to look at other things as to, whole numbers, like 160 is a big round number, 165 is a big round number. We know that this support level is roughly 163. So you can have natural support. You know that 163 is the support. So if, let's say, you took this trade right here, if you didn't exit at the peak or anywhere up here or anywhere down here, you know that right here, you're probably going to get support again. And what the great thing about support is you're going to get buyers to come back in again, because that's what support is. It's a buying zone or a supply zone. So you know that people are going to come right back in and start pushing price back up. And what do? Boom, you're back up here. So you can use these on their own as indications to buy, but you're probably not going to want to use this one because you don't know its support yet. You're probably not going to want to use this one because you don't know support yet. This one's your first indication right here, where it's touched it here, it's touched it here. Now you know that it touches it here. There's a spot. If it fails or if it doesn't come back above, then that's all this back here is invalidated. You can see that it opened below it, and going back to like candles, you can see that it opened below it, dipped down again, and then came right back above. Your ideal entry, if you're just looking at support, is the open of this candle here. It opened above it, and you can go, and you just put your stop right below this candle, and you let everything ride. And obviously, this wasn't as nice a trade as this one over here, but you've got the same thing here. And this is one of Mo's favorite, nice big hammer. And yes, it's not exactly on support, but again, these are all levels. So you get a nice big hammer here. It opens above it. Your entries is at the open. Your stop's right down here, or even right down here. And yes, I know that's a huge stop, but this is the way you got to look at it. So 177-ish right here, 165 would be your stop, is 12 points within your risk tolerance. If so, then that's a go. If not, you just let this one go and you find another one. And what do you know? A month later, or a couple months later, boom, you got another one right here. And it comes right back to the same area. And it comes right back to the same area. So you can see how these support levels, they start to build a case on how you want to get in. And as traders, that's all we're doing is like, we're basically attorneys. And you're building your case. You're putting levels upon levels upon levels of why is this a good trade? Why is this a good trade? Why is this a good trade? And, you know, Mo brings it up all the time. He finds 1,000 reasons not to take a trade. He's building his case. And, you know, it's pros and cons. Like, this is a good trade because of X, Y, and Z, but this is a bad trade because of 1, 2, 3, 4, 5, and 6. How those weigh out, and you have to weigh all of those things in your mind. Is X, Y, and Z worth more than 1, 2, 3, 4, 5, and 6, or is 1 through 6 worth more than X, Y, and Z? And wherever that happens on that side, you either take the trade or you don't. Let's see here. Resistance, same thing. You've got spots up. You've got spots here, spots here, spots here, spots here. This, you would have no idea that that's a true resistance, but that's building a case where this is probably a level. We've got this huge run up from 16 to 34, and it stopped. So there's definitely a level. There's definitely selling pressure at this level, but does it mean anything? Then you wait all the way to June. You see it hit 34 again. All right, now it's touched it twice. Does it mean anything? The third time, this is your confirmation where this is something is going to happen here. And I know Huey, Estat, and Mo, and anybody that looks at the charts, I say, like, this should be a 3 tap and go, which is one of my favorite things. I would have taken this long right around here and would have gotten faked out. But here, tying this back into, and I guess this is what I'm supposed to do, tying this back into using other things. Now we'll bring a moving average in. This big teal one, this is the 20-day moving average, a simple moving average. This is a daily chart, right? Yep. The 20 simple moving average. Right there, that is when I know my trade is invalidated. If it crosses beneath here, so if I enter right here around 33, 33 and a half, let's call it, this, once it crosses beneath this 20-day moving average, my entry for here for this to go up is invalidated and I'm stopped out. So here's how you start to build, to use another layer upon layer, you know. So this is, this should have worked, but this is one of my bread and butter plays that I would have known. I have very distinct levels of entry. You can enter here in the bottom, as this is coming up, or you can enter, if you wanted to, you could wait for confirmation that this 34 level is gone, and you can either put your stop beneath a 34 or you put your stop beneath this 20-day moving average, and now you have levels of how you want to trade. Does that make sense to everybody?
Yes.
It's more support.
I want to see you guys. I want to see you guys in the chat. Was that clear to you guys?
One thing I want to add about JCat's failed 3-tap breakout there is that normally you'll see it break out, but AMD is kind of like, in my mind, AMD is baby Tesla. It does whatever it wants and it doesn't really care, and it'll do whatever it wants for whatever reason. It gets news that should make it go up, it goes down. It gets news that should make it go down, it goes up. AMD is hard mode trading. So you will see like you'll see a setup that is like a 90% win rate, and then it goes and fails like this because it's AMD and it does whatever it wants.
AMD is actually on my no trade list because of how it reacts.
Mine too. I'm long AMD shares, but I will not touch their options.
Sounds like some guys got clapped.
So, and Mo, I'm extremely happy that you brought that up, because the power of knowing where your entry is and where your stop is, and I'll be honest with you, like, I don't care where your exit is. Like, you should always have your exit, but at the very, 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 very least, if you're new to trading, if you don't know where your and I'm going to swear is here, but where your oh fuck level is, like I got to get out, then you cannot take that trade. So, like I said, this is one of my favorite setups. I know that my oh fuck level is beneath this 20. If I'm taking it right in this area of 33, I know once it violates the 20, I'm out. And I have a very strict stop level of this is all it can go. It's the breakout's not there, and I know it. And I'm done, and I'm over, and I'm pissed, but I move on to the next one. You know, so when everybody asks, like, so I'm down 50% on this, I'm down 100% on there, or 70% on that, I'm down like 20% on this, like, what do I do? The first thing that you have to look at is look at your chart. Where is price? Where's price action? Is it still a valid trade? Then I should not. Then no, you don't stop out. Has it broken the validity of your setup? Then yes, you're done. Move away. Drink a beer, kick the dog. You know, whatever you got to do to make yourself, feel a little better. Just do that, because in this game you are going to lose more than you're going to win. You just have to maximize those wins. And I hate to bring the negativity up, but you just have to maximize your wins and minimize your losses.
Just like Rico says.
Yeah, win big, lose small.
Exactly. Real quick, JCat. So there's two questions that are related to that presentation. So Chris asks, would it be one short term and one long term, and both are golden? So he's talking about the actual moving averages, like a short term like a 9 versus a long term like a 20. Basically.
Yeah. So, no, go ahead.
Yeah. No. Go ahead.
So yes, you're always going to want them, a short term and you should want a short term, midterm, and longer term. But you may not need the longer term. Or for me personally, I don't use the longer term if I'm looking at intraday charts. If I'm looking at 5-minute charts, 15-minute charts. If you're looking at charts intraday with at the very least less than an hour, you should be looking at immediate trends, and you should be looking at entries at that point, unless you're day trading, and then things get a little bit different. But I still don't look at anything longer than a 20 moving average on an intraday chart. Anything past that, it's not that to me it's not useless, but then I'll start looking at support and resistance levels across other time frames, or just anything else that I can see on the chart, and it's typically just support and resistance levels. Do I miss? Yeah.
I hate to interrupt you, but
Yeah.
a question from me here. Something I've observed in my trading experience is that, to kind of back up what you're saying, trends don't really last many bars in any type of chart. So to get anything 20 is really a pretty solid indicator on an intraday chart as far as I've seen. But on a 50, 55-minute bars is 250 minutes. That's 6 hours. That's almost the whole day. And so you would be going into the previous day's price action to render your 50 moving average in an intraday chart. And so with your experience, do trends typically happen over those shorter periods, like those 9s, those 5s, and those 2s on the intraday charts, or where is that zone? Is that zone in the 20, like 21, 18? Where have you really found those trends last?
So intraday charts, I typically look at 5-minute charts, and if I'm day trading, your goal is, and now I got to figure out, because I'm old and dumb with technology and how to get to something else here. Hold on. Your whole goal is to find this on an intraday chart. This yellow. Can you guys see my ES?
No, we're
No.
seeing the PowerPoint.
You're sharing PowerPoint, not your desktop.
Shoot. How do I switch the share?
Unshare and then go back and reshare the desktop.
Oh, there we go. What am I? Yeah.
And Jimmy, I'm gonna get to your question in a second.
All right. Do you guys see ES now?
Yes.
Yeah,
All right. So as an intraday trader, your goal, see this yellow line, this gold line? This is what you live for. This is, you just want to see something ride this up. It never violates it. It just, as soon as it crosses, it just sits on it, uses it as support. And here's another way to use moving averages, which I was going to get to anyway, so we may as well just do it now. This can be your support or resistance level. And all this does is ride this all the way up. And if anybody's familiar with futures, if you want to bottom tick and top tick this is 36.77 to when if you want to, before it really violates I would get out as soon as if I had the wherewithal and if I had the patience to actually ride this the whole way up, and I don't. But ideally, if you were a extremely skilled disciplined trader, if you got in anywhere around here, ride this 9 up, and you get out as soon as it crosses beneath this 20, and you got out at the end of this candle, 3,700 to, let's just call it 36.80. That's 20 points times 50 bucks on one. That's $1,000 on one contract in.
It's a long trade.
3 hours, 3.5 hours, 4 hours. That's a nice day's work. So as a trend trader, which is what we all are striving to be, unless you're really just scalping, this is what you want to catch. You want to catch rides like this all the way up until it violates a moving average. And this is how I use a lot of my moving averages. I like to use them as I can see the trend, the 9's riding up, the 20's riding up. I put a Bollinger Band on this because we were talking about it earlier. Oh, yeah, and this is why I had it right here. Whoever was asking about a Bollinger Band squeeze and how to pick one in which you know which way it's going to go, here you can see a perfect, like a beautiful uptrend here to here, and then the band squeezes, which is basically consolidation, and that's where the band will squeeze from here to here, and you know you've got a move up, and it opens up to a spike, and I believe this just crushes until the next day. We will forget about what happened over here. But that's, I mean, and then it goes back to, it doesn't always work. Like, this is, as much as it's a science, it's just as much an art. So going back to what Huey said and Mo and SDOT is, these are all levels. These are all very much guidelines. Like, everything you use here is just a guideline to how to build your case to take a trade. Let's go back to the PowerPoint. I think I figured this out now. So
before you get to this point, so Jimmy has a question. Does this analysis work for trading options or swing trading or both?
So here's the thing with learning how to chart and trading options. Learning how to chart is, all you're trying to do is find the trend or find a reversal or find a reason to get into a stock, whether it's going up or whether it's going down, depending on what the chart tells you. Now, throwing options on top of that adds a whole nother level of complexity, because now not only are you looking at the price of your underlying, now you're trading a derivative of that underlying price, which doesn't always play well with how the price goes. So, you know, in a nutshell, calls up, puts down. Price goes up, you want to buy calls. Price goes down, you want to buy puts. But a lot of times you could buy a call and it doesn't work out as the stock goes up, and then vice versa. You could buy a put, it doesn't work, it doesn't go down. But to back up your whole thesis on what you want to do is, you have to figure out what the stock and what the chart is going to do. Otherwise, we're just throwing darts at a dartboard and we have no idea. I could just say, well, it looks like it's going to go up, or it looks like it's going to go down. We need to know, is the stock going to go up so I know that, okay, I need to buy calls? Or is the stock going to go down so I know I need to buy puts? Not sure if that answered it, but
Yeah.
So if I can, I'll
yeah,
expand on that.
go as much as you want.
So using support and resistance in trading, as far as I've encountered, again, you remember JCat's been doing this for 20 years. I've been doing this for 6. So please use that level of weighting in his words versus mine. As we've said on this call, there's no one indicator that can tell you what to do or what not to do. Support and resistance, trend lines, Bollinger Bands, and moving averages, all of those added together can give you a much more clear picture. But they will not tell you exactly what to do. They don't tell you exactly when to enter. But how I would use how I do use support and resistance when I'm looking at plays is if I see something come across the robot and I can see the bots and the VIP. If I see something come across that robot and it's been less than 5 minutes since it came across, what I'll do is I'll run the chart on it real quick and I'll look and kind of eyeball the resistance, or if I need to, I'll go ahead and draw a resistance line in. And if the call that the robot called, if the play the robot called is approaching its resistance line, I'm not going to touch that play. And it doesn't matter if someone else calls it, if Rico calls it, or somebody else asks a question. I'm not going to touch the play, because approaching resistance is something that generally shows that results in a bearish move, and it's not the perfect setup. So you've heard me say, no perfect setup, no trade, and that's really, that's how I dug my account out of the hole. Was I was able to go ahead and be disciplined and take good trades. And so that's how you use support and resistance, and vice versa. If I see something come across the bot and I see their price is somewhere near their support line, then absolutely I'm going to take it, because it has a lot of room to move. And how that applies to options and how that applies to shares, obviously it applies much more directly to shares. And as JCat said, there are a lot of other pieces of math that go into calculating how an option is going to move as associated to its stock price. I use that as just a general, whether and that's how we start talking about delta and theta, and that's a little more advanced. This is a fundamentals thing, right? So let's look at that with the options. If it's approaching support, that's something you could think about taking. If it's approaching resistance, that's something you might want to be cautious with, and you can use any of these moving averages. The 9 EMA is a really good one. A lot of stocks like to use that as a resistance and a support. You'll see they bounce up off of it or bounce down from it. And so, yeah, just you can marry those indicators in and run charts on your own and look at them, and look at high volume charts like Baba, like Facebook, like Google, like Tesla. Those may not be in your trading price range, but those are high enough volume that they have real price action, real robots, and everything else mixed in there. Again, Tesla and AMD might be bad examples, because they really disrespect everything and they don't care. But focus on the high volume popular stocks, because those are going to give you the best throughput in terms of where you can learn your charting.
I just want to touch on real quick, anyone who's on this call who isn't trading options, because I know that there's a lot of people on this who might not be in an options trading community. You can take some of these same strategies and find the ideal entry, right? Although, like if we're looking at what is this, MTCH? Is that what that is? You want to, the ideal entry for this would be possible on, the break and the retest of that resistance line. But if you're trading the stock, then you want to get it as low as possible. So like, your best entry would be just like the very, very bottom, way on the left, between the dividend yield and the earnings, right? And there's no way to predict it. This particular presentation is catered to options trading. Although if you would have taken an entry at the bottom right there between the earnings and the dividend yield over to the left, and you would have rode a long dated option all the way, regardless of what the action is doing, you would have made money, right? It's the same thing, and it's the same thing with stock, with actual shares.
Can you say that part about the earnings and the dividend yield? Can you point where that's happening?
Yeah.
Right here.
Yep. So
And
like,
how do we know that?
Because the little red thing is actually a phone, so it's the earnings call, and then Thinkorswim, the money sign is actually giving you your dividend yield.
yeah, this information is available on Thinkorswim. I believe TradingView has it. Robinhood, you have to like scroll down and it gives you a date. But
I think Webull actually gives it to you too.
and I think Webull gives it to you as well, right on the chart.
Yeah, and E-Trade does. So does the TradingView platform, because that's very important information.
Yeah, because then you end
Go
up swinging something through earnings that you didn't intend to, and then you get clapped, because you didn't know that earnings was today or tomorrow morning. So that's why Robinhood claps you, man. Robinhood claps you.
Yeah,
Bro,
we had a question on trade consolidation.
PTV, can you invite, please? Okay, go ahead. Let's start.
Yeah, Jay, we had a question about why you shouldn't be trading when you're in a consolidation.
So, what was that, kin that you were looking at before? KIN?
Let's do Ken.
Yeah, because that's just the easiest.
And Devin, I'm gonna get to your question right after this. And I guess at this point, well, no, I know there's more for JCat's presentation because I know what he has in his mind. And then we'll get to the questions after for everyone. And I want everyone in this. There's 100 people in here. I want 105 questions.
Was that the daily? Ooh, boy, oh boy. Let me go to this one.
Clean your shit up, Jay.
Yeah, I know, because I was on. I put that on my intraday chart with different studies on it. So you don't want to trade consolidation. So, all right.
you just drew the straightest lines I've ever seen without much effort. Like,
bro.
like those are 90-degree lines, and you like weren't even trying.
Practice.
So it depends on what you want to do with consolidation. So you can trade consolidation, and honestly, this is an amazing trading strategy if you can figure this out and you know how long it lasts. You can trade between this $3.17 to $5.22. That's basically a $2 range right here. You can make a lot of money trading $2 back and forth. Buy it here, sell it here, short it again, buy it back. So the problem with that is if you get on the wrong side of one of these, say you decide to sell, you decide to buy around here, sell and go short. Next thing you know, you're $12. You get, or you decide to buy back down here. Next thing you know, what was this? This move was what? My data box didn't come up, but $9. All of a sudden, you're $9 in the hole. So trading within consolidation, unless you're planning on just trading the consolidation itself, it just, you don't know where it's going to go. Let's say you decided to go long or short here. What is this, March 23rd? You put you buy 1,000 shares. That's $3,000. You're sitting on your $1,000 or $3,000 till December 12th, and nothing happened. So consolidations, this has to tell you what's going to happen. This consolidation, you have to figure out when you're hitting the brake. So is that the next time it touches 5, you're going to try and take it long, or the next time it touches 5, you're going to try and take it short? Or do you wait till it hits around 6 and it's confirmed out of that consolidation and you go? or the next time it hits 2.5, is it confirmed out of that consolidation? And I guess it goes to 0 in this case. But the problem with trading in consolidation is all this crap that happened here for 9 months, you just left $3,000 of buying power when you could have been trading
Tesla.
SPY. You just bought 100 shares of SPY, 10 shares of SPY for $2,000, and you would have made all that. So that's why you don't want to get in consolidation.
Let's look at real quick. Let's look at MRO daily chart.
Bowie, did you want the screen? I thought I saw you say that.
No.
Oh, okay. All right. I just saw it. What were we looking at here?
Let's
What'd
look
you
at
say?
MRO, Marathon Oil. It's a good example of consolidation within a certain kind of channel and then a kind of a breakout.
Yeah. So for the most part, your consolidation is there, and it's just trading within that. So here's perfect, actually, and this gets back to support and resistance. This isn't the most perfect resistance line, but it's actually not that bad. It broke out, came back, had issues with it, and the reason we know that this is going to be resistance is this huge gap right here. So we know that things are going to get mucky between here. So once it gets in there, you can see that it just doesn't know what it wants to do. So once it breaks out of resistance and out of this whole channel, we can reasonably assume that this is going to go up. Now, ideally, what you want to see, this broke out, it's coming back down here. Old resistance becomes new support. Ideally, you get in right around here. And now we're looking at, well, let's go farther back.
Do the weekly.
Yeah, I'll do weekly. That's probably easier. Now we're looking at, targets here. Targets here.
So he's drawing previous support lines that are going to become future resistances.
Small target here, but because that's such a big drop and recover, I'll give that one. So now you have targets all up until 14.5, and if you're a real man, you hold to here. I am not, so I wouldn't. And then if you're a god, you hold to here. So now you've got 7 to 24, $17 worth of targets with an ultimate target at 17 points higher.
Hey, let me show you guys something real quick. JCat, go to the options chain. Go to Jan 2021 real quick.
Monthly?
Yeah. Look at the open interest on the 8 call. And then real quick, let's go to Jan 22. Look at the 15 call.
There's a lot of there. There's a lot of people there. And what, I know he was gone over it a bunch in the pit, but all that open interest means there's a lot of people that are placing bets at that level. Typically on calls, it's going to be more people placing bets that it's going to go up than people shorting the call. So you can reasonably assume that there's a lot of people buying that $15 call, and there's a lot of people buying that $8 call. And we had 3,000 contracts traded today. So there's a lot of people even most likely adding to that 30,000 number. So what you can do is how you want to think about options on this. Bought this at 35 cents, $8. You're just hoping that it's over 8.35 by expiration, but between now and then, you'd like it to move a lot more. So how much faith do you have it moving that much by basically that date, 118? There's natural resistance there. It spiked there. So there's already natural resistance there. A lot of people are probably started playing this move right here
Hmm.
as it started to curl. And all they care about it is getting to roughly 8, and they can exit profitably.
That's their potential profit target, which is going to end up being not only a natural resistance, but a reaction to a previous resistance. Because we're all looking at everyone's looking at the same chart, right? So that level of resistance is like a self-fulfilling prophecy, just because people say, let me take my profit before someone else does at that level, right? And that's what happens. Devin is asking, someone with an iPhone with no name, which I would love to know your name, asks, what time frame is best? I'm confused about that part.
And that depends on you, anonymous iPhone.
All of them.
Yeah. So what are you trying to trade? If you're trying to trade day trade, then you're going to be looking at 4 hour, 5 minute, 10 minute, 15 minute, 1 minute, daily, a little bit of weekly. If you're trying to swing trade, you're going to be looking at, I look at the 5 just because I'm used to it, but some sort of intraday, whether it's 5, 10, 15 hour, but then you're going to look at 4 hour, one daily, weekly, monthly to look for levels. If you're investing and you're using the chart to figure out levels just of investment, over the long term, you're going to be looking at daily, weekly, monthly, yearly charts. So, yeah, I guess what Mo said, all of them.
Somebody says, does the time frame have an impact on the value of your option? Or it says, does that have an impact on the value of your option as the price moves, the open interest? Yeah, the open interest does have an impact on the option price, because I'll put it to you like this very simply. If more people are on that chain and more people are buying that chain, then that chain then becomes more valuable, and then the value of that chain increases. As people sell that chain, and there's less open interest on that chain, then that chain becomes naturally more invaluable, or less valuable, and then the value of the chain decreases. So yeah, I mean, you want to get on high OI chains because they're liquid and they're easy to get in and out fast, right? You can tell liquidity by the bid-ask spread on the contract price. And sometimes, maybe JCAT and maybe SDOT know how to like get on chains that aren't as high open interest and high volume, and are able to like cheat it in a way that they can get in low and sell high like very quickly. I don't know how to do it yet. I know a few.
I don't like doing it. I have a
is about the only one I can do it on, Booking.com, and
they're
expensive,
and those spreads are so wide.
Yeah, that's about the only one. But I think actually learning volume and OI is one of the most important things when you're trading options, because so many people get stuck with useless contracts because they can't sell them.
Yeah. So my personal rule is, if there's not at least 200 contracts of open interest, it's not going to interest me.
That's around mine too. I'm around 200 to 500, and I won't play anything less.
Anything less, unless I have to be in it.
Right.
So Empress asks, what's a chain?
Do I still have the? Yeah, I know. So this is your option chain right here. These are all your expirations. In the middle, strikes in the middle, calls on the left, puts on the right. So this is the chain, and this is the whole option chain. The $8. Let's not look at today's. Let's look at next week's. $7 call, and here's your bid and ask, 26 cents to 30 cents. $7 put, 23 cents to 26 cents. This is your basic option chain, has your volume, has your open interest.
Roll through that chain real fast. Are all the 7s and 8s real close there? I mean, look at the volume and open interest on these even.
Mm-hmm.
Roll through the December 24th and 31st. Are they all? That's not as
20,000.
Yeah, it loosens up as I guess time goes on.
Okay. Yeah, it's just a monthly. Yeah, this is the monthly. So Everybody trades a monthly. And so here's another thing, and just another tidbit. Something like MRO, or if we looked at like XOM, which are big names. When you're looking at monthlies, that's where all the volume is going to be. Institutions and old people all trade monthlies. That's all they will. I think somebody asked about triple leverage ETFs.
Mhm.
They trade weeklies, but they throw a ton of money at the monthlies as well to get the triple leverage. So institutions, banks, and old people all trade monthlies. And it's funny. I bring up old people simply because something like MRO, or let's go to not even Apple. What's a good grandma stock?
GE,
GE. There you go.
Gee.
boomer stocks.
They're probably sitting on
Look at the
on
Jan. Look at
GE
the
when it was good.
look at the Jan
one?
15 chains.
165,000. I'll guarantee you that a good 20 or 30,000 of that are covered calls.
Yep.
It's just that an old man's been sitting on GE since it was trading at 115 and has been selling covered calls against it since he was 60 years old for the past 50 years.
And that's how he makes his retirement income.
Exactly. So you want to make that dividend money, everybody, like from He Who Will Not Be Named talks about a lot. This is another way to do it. You
No,
buy
it's okay.
stocks.
It's okay now.
Oh, it's okay now. We're all good. All right. So how Chris talks about getting, and I shouldn't say anything bad about him because this is how I got to meet all you guys is basically through Chris. But that's another way to pad your income is you buy stocks and you sell covered calls against it at levels that it will never get. You take 30, 40 cents a contract. If you have 100 shares, $30. You do that every week. You do that every month on 10 stocks that you own. It's not a bad day. Or it's not a bad month.
Where were you 6 months ago when I sold covered calls and got wrecked?
Well, yeah.
But now I
Yeah,
understand.
yeah, no, I know. That's what sucks about it. Then you get a trending market and you get
Exactly. I got hammered.
fucked.
That's why I say if you don't understand it, don't sell calls or puts.
I know we cut into your part of the presentation. Is there anything else that's an absolute crucial part for you to mention?
Pull back to support. We kind of talked about that. No, man, I think I'm good. I guess maybe the only other thing that I'll bring back on moving averages, on how I like to use them. So when you get a setup like a flag, and flags these work perfectly. Let me see if I can get. Nope. So this blue line's the 20 MA.
Oh, we can't see it.
Oh, sorry. I just hold on. Can you see it now?
Yes.
All right. So what I like to use these EMAs for is on flags, especially. You get this the flagpole. You get this big move up. You can see that prices moved pretty far away from these 20s, from the 20, or from a whatever shorter term. And this is a daily chart, so that's relatively the shortest I'll go. That's an 80 MA, but it's just kind of there for reference. I know when the flag's ready to go, when the moving averages catch up to it. So this has moved, this was on the 20 right here. As the flagpole built and it spiked in price, it moved pretty far away from the 20. But as the 20 catches up and as this flag builds, that's when you can basically use the 20. Oh, shit. You can use the 20 as a springboard for price to move. So that's another way to use moving averages is on consolidations of after a move. And this is why I don't really need to use the RSI, because basically all I want to do is let this moving average catch back up. And I know that's all the RSI is doing. Is RSI was probably over 90 right here. And in this whole consolidation, it just dropped right back into 70, right back into a decent level, and boom, you get the move. there.
And this is actually a good example of what the person asked earlier about trading in consolidation. I would, as this is consolidating and as that 20 moving average is approaching, I would probably take a position on the next 1 or 2 daily candlesticks, because you can reasonably expect that there's going to be a big move, and according to this, it looks like it's an upside move.
All right, but I'll give it back to you, Hugh. Yeah, stop. There we go.
So guys, this is the part of the and thank you guys for sticking through. There's 94 people here, which is incredible and very humbling, actually. And thank you guys, JCat. And I just mentioned I'm gonna drop JCat's Twitter in case you guys didn't catch it earlier. JCat, S. Dot, and Mo, you guys are every day dropping gems every day, for the community, for the people. And so at this point of the presentation, I kind of want to take questions and go through and kind of drill down. Maybe we'll do it for like 25 minutes or so, just to, because I know it's Friday night, like people have to be with their families. My wife is, thankfully, she's working as well, so she's not giving me the side eye yet. So iPhone asks, can we get the PowerPoint somehow? JCat, that's on you. Maybe you guys hit up JCat and you guys can work something out. I know S. Dot's going to make his EMA PowerPoint available. So any pattern that you particularly like. So I trade the 3-bar play on multiple time frames, on every time frame. It looks different on different time frames. JCat, what about you?
I like flags, the triple tap, and basically, I mean, all of mine are derivatives of the same thing. So it's like a flag is just a consolidation after a big move, triple tap with a small consolidation before it goes, and consolidation back to support or resistance.
What about you, S. Dot?
Kind of the same thing as JCat. He's actually helped me really get into like the triple taps.
And Mr. Mo Money, what about you?
I really like when the MACD is it hasn't broken through yet, but the CCI has broken through negative 100 or zero, zero preferably, negative 100 not so much, as that's an indicator that price is now increasing, but you're kind of timing the top. So
you're using CCI on a daily?
I use CCI 14, and so that would be on any time frame. In particular, I focus on you all have heard me talk about this. I actually use non-standard times. I use 8s, 8 minute, 16 minute, 32 minute, 64 minute, and 8 hour time frames.
Hang on.
But that the closest things people are going to have are going to be 5s, 15s, 1 hours, 5, 15, 30, 1 hour, and dailies. You can use those, and the strategy works on all of those. Just by using these non-standard time frames, I see things a little differently, so my moves aren't necessarily detectable by the algorithms and other people looking for the moves, the exact moves. My moves are going to be outside of what everyone else is looking at.
Did that answer your question, Alonzo? I see you asked why the non-standard time frame.
And to kind of piggyback on that, and Mo actually pointed this out to me, and I know guys that have done it, and I never really thought about it, but I think Mo had shown Huey, S. Dot, and I about looking at at a different time frame. All the algos look at the time frames that we look at. So 5 minutes, 15 minutes, hourlies, they're all looking at that too. So it gives you a little bit of an offset from what they're looking at, and it's not that much different, but it can give you a different perspective.
I have a couple odd ones in mind. So I trade off the 3 minutes sometimes on an intraday. And then I also look at 8 hours instead of 4 and dailies.
Interesting. Yeah, I do 8 hours sometimes because I want to see the pre-market and aftermarket action, but not often. Look at this thing. This thing ripped. All right, guys, come on. I need more questions. Let's see. I've been trying to learn charting on my own for the past month. This has answered every question I ever had. Thank you. That's amazing, man. That's really, really amazing. And I hope that everybody that's on this call got some value from this. Um, and anyone who maybe it's not as clear, dive in and jump in with us and tap into us. And maybe, what I did when I learned was I just charted and posted them and asked for feedback. Like we're in these communities for a reason. You ask your community members, hey, do you guys have these same levels? And we'll all compare.
Yeah, we're really good about posting our charts too. So try to reverse engineer what you're seeing in our charts. That's how I learned a lot. I would take some other seasoned traders charts and just look and be like, oh, okay, I see what he saw here, and just try to learn that style as well.
Yeah, I learned a lot of my charting from Stock Dweebs on Twitter. A lot of my technical analysis is actually from Stock Dweebs, and we have different styles, but he taught me all the language, and then you just compare with the guys who you see are posting charts and just talk a little bit more about it. Let's see. Jay Miller, I got you. Just DM me. How do you get your white arrows on TOS? So my white arrows are a study. It's just a pivot. You can just go to the studies and type in pivot. This one might be different actually. Let's see. This one's a TTM scalper alert, so this is a little bit different, but it's basically pivot points, which I think SDOT put me on to. Maybe it was JCat. Like my first interaction with JCat was, "Hey, can I have those? Can I have that study with those arrows?" And he just sent it to me.
The pivot points.
Yeah,
Pivot points are great. Anybody that's intraday trading, use pivot points.
yeah. So like, if I'm in TOS, so you guys can see the power of TOS and why I always advocate for it. I go to edit studies. So this is a TTM scalper, but you can easily just go to like pivot points, double click.
Yeah, there's all types. Like I have one that's just a tad different. There's all different ones that fit your style.
Yeah. Also, I want to show you guys, everyone who's sticking around on this call, who's trading options, right? And this might work for people who are trading stocks as well, like actual like buying and holding or long investing or even swing trading. This one's pretty useful. It's a probability of expiration.
Look at that flag though.
Yeah, this thing is Billy's pretty good. Billy's a gaming Chinese gaming company. So what this does is it gives you, and let me see if I'm on the weekly, so let me zoom in so it can make more sense. So all these red lines are the third Friday of every month, which is known as OPEX or options expiration. Like JCat mentioned, it's the most liquid chain, is on this date, right? The third Friday of every month. And this gives you like kind of price targets for each Friday, on the bearish side or on the bullish side. So if you wanted to take trades, you can reasonably say that by April 16th, 21, if this doesn't have, based on how it's moving, it can probably reach 106.66 by that day. So that's a good gem on TOS. I don't know if TradingView has it, Mo, and I don't know if Webull has it. I'm not sure.
What is this?
The probability of expiry cone or probability of expiring cone right here.
Let me check.
Yeah.
I would doubt that TradingView does,
Mhm.
simply because it's got to pull in option data.
Mm-hmm. It's extra data that probably you have to pay for, and
yeah.
Young and Icy asked if we went over VWAP. Do you guys want to go over VWAP?
I think this is what Mo and I got into an argument about the first day in Wealth Squad.
The VWAP.
It may have been. No, I think it had to do with spreads, but I
think it was both. I think that was the second argument.
I'll be 100%. Well, we were talking about VWAP, and on E-Trade, VWAP doesn't show up on non-intraday charts. It only shows up on intraday. And so anyway, yeah, I remember now. I'm sorry.
It's all good. And now look at this. 3 weeks later.
Yeah, the VWAP. So let me just get rid of this. I hate when it does this. So let me just get rid of my upper and lower bands, which you can kind of treat the upper and lower bands on the VWAP study on Thinkorswim kind of as a Bollinger Band. But I'm just gonna get rid of it. So, let's look at VWAP on a daily, and what it does is it just goes right through the price action, like literally right through the middle of the price action, and it's useless, right? But then when you zoom into like the 5 minute, on what time frame is this? The 1 day, 5 minute. Let's do something deeper. I have all these Zoom, the chat and all this crap in the way. Sorry guys. Let's do the 20-day 1 hour. So you can see that it's bullish and it's kind of like right in the top of the VWAP. Here it's underneath the VWAP. I don't know. I don't really want to go over it, guys. Do you guys want to go over it? I really don't. Young and Icy, my bad, bro. I really don't want to.
Yeah, it's another rabbit hole.
Yeah,
Can you help me
we're already
understand
on,
a really bad trade I did?
Sandy, what'd you say?
Yeah, I did a really bad trade the other day, and I'm trying to figure out, like, you know, how this happened, and how do you figure out when to get out of something? So like I bought like Peloton. So I bought let me see. December 9th.
Let me pull it up. Hold on. Let me just answer this one question. December 9th, P-Time. Which strike?
I have bought a call for wait a minute. What did I do? I'm looking at I'm using Robinhood. So I'm looking in the 5 contracts, 119. Call December 11th.
December 11th. So today.
But I bought it on like I told you, I bought it on the 9th.
You bought it on the 9th. Okay, so the 9th was, all right. Yeah, we could jump into this real quick. So the 9th was right here.
Thank you.
Why did you buy this contract?
Because it was going up. I was using stock charts, and I saw that it was going up, and then so the 9th was on Wednesday, right? No, yeah.
Yes.
So it went up and then it went down, and I said, well, I'm not gonna sell it. I'm gonna wait, see what happens tomorrow. And then that was 10th was the Thursday. It went up, and I had recouped all my money, and I was over $30.
Okay.
But you know, I'm thinking, well, you know, there was an uptrend, and it was gonna keep on going up, or at least to make a little more, you know, a little more than $30. And what happened was it just dumped.
Yeah. So you bought the Friday expiration on Wednesday, and you made your money back here, and you were even positive here, correct?
Yeah, and I made all of my money, the money that I paid for the contracts, I made them back plus 30, it was up $30, and I could have sold there. But like right there, it turned around and it dumped, and then I just held it to today. You know, now Robinhood allows you to
0 day. Yep. 0 day. You can buy and sell the same day. Wait, so let me ask you a question. You said the 119 strike for December 11th.
Yeah.
All right, so I'll tell you exactly why it dumped, right? So as you approach, I'm gonna just pull up another chart while I do this. As you approach the expiration date, the theta kills you. Like as it gets closer, the theta gets exponentially higher. So, you know, usually like whenever there's let me just match this to that. So whenever there's something that's expiring on Friday, if I'm in it on a Thursday, I'm like, usually I get in on Thursday and I sell on Thursday, because if you're not in the money by Friday, like if your contract is not over the strike price and also like a little bit over break even, then you're not gonna see, you're gonna lose, right? It happened to me with Vail this morning. I gambled a Vail, you know, whatever price it's at today, you know, I think it was like one. Let's see real quick.
Yeah, but my question is, like, you see how it went up?
Yeah.
And like there, like I didn't get, like, if it was already there, I was over $30. I mean, I'm thinking that's like what they call FOMO, right? I'm thinking, well, if I make $30, it's gonna keep on going up, and
Well,
it just turned around the same, like in an instant, and it just started dropping and dropping.
Yeah, that was more greed.
I know about the Friday, you know, the last day, whatever. You know, I just kept it till Friday because I said, well, maybe it'll go up, and Robinhood is now allowing you to sell options on the same day. it expires up till 3 p.m. So I figured I'll hold it anyway. But that uptrend happened on Thursday, and it turned around in the same like 5 minutes.
Yeah, that so like when you get to this expiration date, like and I can see how you can reasonably expect that it bounced here and it came all the way back
That
to
was
the
on Thursday. That bounce was on Thursday, and it turned around the same Thursday.
Yep. So it was in an uptrend here, and then it came down the day you bought it, but then it bounced, and now we see like this uptrend, right?
Yeah.
It came over the levels of the previous highs, right? But it didn't break over this high, right? But still, it's fine, and you're in profit. And I can tell by looking. If you look over to the right, this is the contracts chart, right? So I'm here, and what price did you buy it at?
Let me check. Hold on.
And there's a fast lesson and there's a slow lesson here.
To come full circle to Huey, I mean, that's a pretty heavy resistance area.
Yeah,
so she bought while in a resistance area where she should have waited for it to break the resistance before actually buying. So like she bought right in that tough area as it was.
Yeah.
So you would have.
Well, you see when it goes where your thing is, we go up, and then that downtrend there, that was Wednesday.
Yeah.
And I held it, so then when it went back up, that was when it started going back up, that was Thursday morning.
Yep. So
and then in the same Thursday it went down.
Yeah. So you had your diamond hands rewarded you, right? I mean, you got into it at a resistance, and as S. Dot said, and also people in the chat said, like, this is a tough zone for Piton, right? You bought into it while it's approaching a resistance. Like the best entry would have been like obviously buying out of support, right? And so I'm gonna zoom out on this so we can see.
See, that's my problem. But the reason I asked, because this is a prime example of what I'm doing. Like I have to really study these charts, and that's why I'm in like your group there, and I'm not in the actual Rico the channel, but I mean I followed him from the other group, but I know that you guys give classes, and I have gotten on your mailing list, so I'm like trying to figure out like. Watching you for all this evening and you guys talking is really helpful, because I see like I have to learn how to when to get in and when to get out, and although you're gonna have some losses, but that was a big loss right there.
This is a typical problem for most new traders, buying at the top and then thinking it's going to go higher, and then the market takes it lower. So I mean, these are the kind of trials and tribulations all of us have gone through. My main thing is, if you're learning, don't be taking 5 contracts. Take one. Let's see how it goes, right? Let's be taking one until we got a system down. I rarely take 5 contracts as it is. Like I'm playing like 1 and 3.
Yeah.
So and I feel pretty confident in most plays that I go in,
I recently started getting to the so one, I would like to applaud your ability to hold those contracts through the turbulence. Like
diamond hands would have paid off then.
Yeah, diamond hands, that's really admirable.
So excited. Look at that jump. But like you see, I just turned it happened so quickly, and it wasn't even like a day or half. It happened like in 15-20 minutes. Like it just turned around, and then it's like, what do you do? And I'm like, well, let me just hold on to it, because I couldn't sell it. When there's dumping like that, you try to sell it, and you can't. You have to keep on changing the price. Yeah. So I figured. So I read. So since Robinhood sent me that message the other day that that you can sell contracts on the day of expiration till 3 now. I said, well, since it's going down, is down already, let me just hold it till Friday. Maybe I can recoup some of the money. And I didn't. All I recouped. I sold today at like 2:30. I said I didn't want to wait till 3. Maybe in half an hour I can sell it. I sold it right away, but I only got $30. I mean, but at least I got something, back. I didn't. But it was a lot of money.
Yeah, I mean, I don't like holding into Friday unless I'm in the money or like well into the money. I don't even like holding to expiration. So buying
I never usually do, because I was always told don't wait till the last day. It's hard to sell whatever. And I'm explaining to you why I kept it till today, because
Yeah.
yesterday was my time. Since it went back up, it was my time. I should have just taken my $30 profit and kept it moving. But I wasn't looking at any charts.
So
I
what
mean,
is
I
that?
was looking at a chart. I went on stockcharts.com, but I mean, it's like what Mo was saying earlier. Sometimes you look at the chart and it's not really telling you anything. Like, sometimes it doesn't. You don't know in any given moment it can do something different.
Yeah. So the lesson there for you is to watch the charts and see where the trends are, and then also when you see the profit, just take it, because you don't know what's gonna happen the next day. Like that's what you have to do now. Whenever you see that profit, that $30, put it in your pocket.
Yeah, but sometimes you have a play, and you okay, well, I don't know, I'm scared, I don't want to keep it too long, and you make maybe $50, and then you sell it, and then it goes up 300%. Like, so it's like, I don't know.
Yeah. It's I mean, you got to look at the charts. You have to. You can't jump into plays off of a whim.
After you sell and you make, and then the thing keeps on going and going and going, and then you're like, damn, I should have kept it, but you don't. I don't know. I'm confused. I have
Just
to.
just like my boy Billy said, profit is profit. Like, you just take the profit. If you're waiting, if you see it and you say, hey, I'm happy with this profit, but it can go much more. Those are famous last words. That's because you're gonna say that, and then you're gonna get clapped. You're immediately gonna get clapped. That's what happens. It happens to every single person. Everybody. I bet you everybody in this call can attest to that. You know.
Yeah.
But I
If
feel like you gain confidence when you know the reason why you sell. You know what I mean? Like, versus I'm selling just because I'm up, 30, let's say $30 while we're using this example. I'm up $30 in this play, so I'm just gonna sell because I'm up $30. I feel like her fear was she didn't know, right? She doesn't know if it's gonna go up, 1,000% or whatever from there. But if she knows why she sold, I'm selling because I know it's in the zone of resistance. Peloton's usually tough around this area. I'm going to go ahead and get out of the trade. And then she's okay with that, right? I feel like she was holding the contract more because she felt a gut feeling, an emotional feeling to hold the contract because it could go higher, and then it just didn't happen. You see what I'm saying?
Emotional is the key word there.
So one of the things that it's hard to like, because with this, if you're in the money and if you're making money on your trade, it's hard for me to tell you to not sell, right? If you're up $30, you're up $50, you're up $1,000. Like, if that's what you're comfortable with making, more power to you. Green is green, right? But what I would like everybody to get to, and I know, S. Huey, Mo, and all of you would like all of us to get to, is what I don't know who was just speaking before me, but like, is to get to your reason to sell. So like, when I was putting my charts up and there was a target there, like, my whole goal is not to sell anything until it gets to one of those targets, target number one. And then I'll layer out. And if that's all if I only have one contract, or if I'm not comfortable with it, or if I don't think it's going to go any higher than that target number one at that point, I'll get out. But you need reasons to sell.
Mm-hmm.
And we need to get to the reason to sell that is not just, well, I'm up $50 or I'm up $100. Like, as a trader, you want to have your reason to sell. Well, the stock got to my price. That is my target, and I'm getting out.
Right.
And that's when the first time you do that, it's an amazing, amazing feeling as a trader, because it feels like you did everything right. I got in when I was supposed to. I set my stop where I was supposed to. I got out at my target.
Absolutely.
And it's a journey to that. It's a journey to that. And if you're up $100 and you're happy with it, even though there might be another 100 on the table, take that $100. Take that $100. Learn the lesson. Look back at the trade. Say, yeah, you know what? I left $100 on the table.
Right.
I got out before my target, but next time I'll try to do better with that. Next time I see this setup and I see how this chart is set up, I will try to hold it to my target. But at least you made $100.
Yeah, but I was just thinking about, You see how it went up so high? Like I figured
You
it
got
was.
greedy. You got greedy. You can say it.
It's all right. It's all right.
I don't
Every
want to
day.
say.
Every day. I do it every day. Every day. Every fucking day.
I got greedy, real because I said, "Shit, I want to make some money," and I was going. Look, it was going up, and that turnaround was so quick, and it just started, and when it starts dropping like that so fast, like a free fall, it's like you don't even know. I don't know, like you can't. It's like
You freeze. You freeze.
you freeze first, and then
I
you're like,
100%
what's gonna
understand.
happen? And then you try to sell it, and it's going down so fast that you nobody's buying it because the price keeps on going down.
Yeah, one thing, we've kind of had this question asked in a couple different ways, and I wanted to address it, and I think JCat did really effectively, but I just want to make sure we get it through again. People are asking, how do I know when to enter? How do I know when to exit? And that's kind of what we're talking about with the trend line support and resistance, right? If you've entered a position, whether it's a stock or an option, and it's approaching that resistance line, generally speaking, that's a good time to exit. And like I believe it was Huey said, or maybe it was Estad said, everybody's looking at the same chart and making the same trade. So you might want to get out a little bit before it gets there, because other people are going to get out and then cause the price to go lower faster, right? Because everybody's looking at the same chart, seeing the same resistance you are. And so you can do that with trends also, and you're like, oh, it's not really approaching the support or resistance I've drawn, but in its own little trend right now, it is approaching this trend I've drawn. And so you can use your trend lines as a way to, you see we've got this resistance zone up here, but in this there's this big Hulk green candle in the middle of the screen. Left. Yep, that Hulk. You see how that was approaching that trend line, and it immediately started coming down after that.
Yeah.
And so it didn't even touch that resistance zone. So you can marry the support and resistance along with your trend lines to figure out when to enter and when to exit trades. Entrance is a lot more difficult than exit. Exit is really easy, and I think JCat just said this. Am I profitable? Yes. And so if you're asking if you should exit, and the answer to the question is yes, I'm profitable, exit the trade. There's more trades to be made that day, the next day, tomorrow. The market's going to be there for forever, and so, take that money. And me personally, my own little minimum is $20. If I've made $20 and I start looking at stuff, I exit the trade. And the notorious example from today and yesterday is Viru. Yesterday I got into Viru. It shot up real hard, real fast. I had 2 contracts. I grabbed my $40 and then I got out.
Okay.
Who's opening bags on the mic? I don't know who it is, but I hope that's not my beard. So, that's kind of how you answer that question. When do I enter? When do I exit? It's if you're approaching your trend line or you're approaching support or resistance, and you're profitable, that's probably a pretty good time to exit. This isn't financial advice, and I'm not telling you it's going to work out in the best every single time. But that's how I use these indicators and these technical indicators, oscillators, to tell me whether I should enter or exit the trade. If again on these red candles, as I would see them, I'm like, oh, that's barely, right there. That's barely approaching that trend line. It's really not it's barely halfway there. I don't really want to enter that trade, and so I wouldn't take that. I wouldn't enter this Peloton on these. Again, you caught it on that uptrend, and that's fine. You're entering your trading career. And actually, I'm going to tell you this: the best thing that could have happened to you starting a new trading journey is to have a loss at the beginning. Yep. I started off my trading journey, I want to say, with like 7 wins in a row, and I thought I was effing invincible. I thought I was some sort of clairvoyant savant that could just see the market and see the matrix. And I started violating all the rules. I started purposely going against the rules. And what ended up happening is I ended up dropping $2,000 on Microsoft's earnings. and I ended up holding the bag on 39 contracts because I knew Microsoft was going to crush their earnings in July. I just didn't know the CEO was going to say, oh, well, next quarter might not be so good, and absolutely tank their stock after hours. So, you know, the worst thing that could have ever happened to me in my trading career was starting off with a bunch of wins. And because you started off with a loss, you're going to be more careful. You're going to follow the rules. You're going to develop a plan, and you're going to be better set. And you're not going to get cocky and start doing stupid stuff like wagering your entire trading account on a single security on earnings. You know, what they call that YOLOing, or the kids call this YOLOing or yeeting your account. I hate that I even know what those words mean in my 40s, but you know, that's what I did, and it was stupid, and I hate myself for it, and I will never do that again. But you've already had those lessons, you've already paid for those lessons, and so this is an amazing thing. You are going to take losses, and it's better to take these losses early on because now you can build off of them. You've already got the lessons, so please keep that positive spirit. I can hear that hope in you, and please keep going. Hop in the chat. I'm in the Discord every weekday. I'll answer your questions. No problem. And I'd love to help you grow. I know Huey and the other gentlemen on the call have services where you can book time with them specifically that works better with your calendar. So if you can't get on to talk to me during the day, you can get private time, half an hour with one of them, and they'll walk you through anything you want to learn, you know?
So very quickly, and thank you, Mo's the man,
Thank you
guys.
very much.
Yeah, your lesson is to look at the chart and then, you know, once you're in profit, sell it and move on to the next play.
Yeah, but when you see people like you and
forget about that. Forget about everyone else. Forget about what everyone else is doing.
It's you.
Because we're not playing. We're not playing with your account. Only you are.
Yeah,
can manage your account.
It's your money. It's your account, and it's your journey. Like.
All right, thank you.
I saw somebody ask a question about would RSI be a good indicator to get out of this trade. So I highlighted the trade where she took it and the entry and exit, and I highlighted the RSI. And what I see here is a stable RSI throughout, right? Only thing I see here is a possible entry if you're watching it. You wouldn't, like, RSI isn't live, it's a lagging indicator, and so, you know, the candlestick will form, and then once the candlestick is fully formed, then the line will form. And by that time, you kind of already missed that move, right? If you're waiting for the RSI to form, but it's stable. You know, it doesn't tell me that she needs to exit, not like it did over here. Like over here, this is a clear exit signal, right? So I just wanted to answer that question. Let's see. Yeah, Billy said, but at least she knows why she got clapped. I hope she knows why she got clapped. Because if not, then you're gonna repeat that lesson again and again until you.
You're saying I got clapped because I got in at the wrong time and it hit resistance.
There's a bunch of reasons. There's a bunch of reasons why you got clapped. You got in here. You got in at the top of the uptrend. You got in at
right there.
Past support, which became a future resistance, and you got it on a Thursday and trying to sell.
I got it on a Wednesday. I got it on Wednesday.
Okay. And then the last reason that you got clapped is because you didn't sell it when you were in profit on a Thursday.
Yes.
Look at the chart. The chart tells you everything you need to know.
Yeah.
Let's see. Does anybody have any other questions? And thank you, Sandy. That was good. Thank you for that. I know that guys want to get back to their family. How do you prep before the bell? And is it possible to time or squeeze? Guys, how do you guys prepare before the bell?
I have my handful of stocks that I'm watching, and since I mostly scalp, I am charting like pre-market supports and resistances, and supports and resistances from like a day or two back, and then they give me my targets, pretty much.
So like he'll do these levels here. Let me get my proper drawing tool. You know, see what it did the previous day. Pretty much.
Yep, pretty much just like that.
And then, you know, maybe the pre-markets, right? And then, you know, like, oh, we're within that range. You can see that this acted as kind of a support here. Yeah.
Yeah, SPY likes to play in any area it slows down a little bit. So you can almost mark any of those where the 5-minute taps a few times and mark them all through, and they give you good levels for the day.
Yeah, and so S dot plays Spy, I think, every day, right? At this point, or every
Yeah,
Monday, Wednesday, Friday.
mostly 0 days. Monday, Wednesday, Friday.
Yeah, he plays Spy on Monday, Wednesday, Friday, so he knows what Spy's gonna do on Monday, Wednesday, Friday. So to someone's point in the chat, I think it was Billy. You guys want to get intimate with these stocks. Just get intimate with them. Sandy, just keep P-Town on your list and keep watching it and get intimate with it, so that way you can get your money back. I don't urge revenge trading, but you know, it worked for you. It almost worked for you that one time, so it'll work for you again in the future.
Usually, I actually, in my own little strategy I built in my little time, I call it punk trading. When the stock has punked me for my money, I don't go back. I don't, you know, like AMD on their options has punked me. I really don't play AMD anymore because of that. Apple has punked me for my money. So I don't go back there. Microsoft punked me for my money, but when I see Microsoft, I'm getting my money back. So I have been playing Microsoft a little bit more lately, but I personally avoid things where I've lost the money. And what I do is I study kind of to Huey's point. I'm sorry, Huey, and I'm sorry, Reek. To Huey's point, I study those charts for longer so that when I do get back into them, one, I'm not getting in on revenge, and two, I understand their price movement and I understand how they develop and how they change.
Yeah, I rarely get into a new stock. I kind of stick with the same 10 to 15 that I've played over the course of the last 6 months. And if there's something that I've never touched before, it will strictly be a lotto for me. Like, I just stay away from anything that I don't know.
Yeah, I mean, I have a watch list of maybe 40 stocks, and at any point in time, maybe 10 or 15 are in play for me.
Yeah, I
So
can
it's
make money off something.
yeah, so it's basically 10 stocks I'm looking at.
Yeah, that's how I trade too.
So Carlos asked, will like with Piton, is it going to break through 120 at some point, like in theory? I mean, you tell me, Carlos. You tell me, what do you see on the chart? I personally see an uptrend right now. I see a recent high of 140, a relatively recent high of 140. I see a gap that's slowly getting filled.
So that gap, if I remember correctly, I think was the Monday when the vaccine news came out. I think that's November 9th, right?
November
6th.
Yeah, November 9th. Yep, the 6th to 9th. This was a Friday. This was
Remember the Monday after the election,
Yep.
like the vaccine news came out, and then
Yep.
boom.
Same thing happened
So
to
I'm
Pinterest. Go ahead.
actually curious how it's going to act, now that Pfizer and all these vaccine news. I'm wondering if it's going to drop again, or it. That's like, I don't know what the long-term play of Peloton is.
Yeah, I mean, if we look at
as far as trading it.
Yeah, if we look at the cone tells you like pretty much what the market's price targets are for based on the volatility and based on what it's trading at currently and how it's moving. I see it coming back up, and the reason
mommy.
the reason why I see it coming back up is just because it's climbing. It's just climbing. It's showing strength. It's
an uptrend.
Yeah, it's an uptrend. I mean, it's filling the gap.
Mommy. Where's Aya?
Hey, Mom.
What's up?
You got the mute?
No, I don't have mute in the Zoom. And that's Rico. I wouldn't mute him anyway.
Yeah.
Oh,
I'll mute his ass in the Zoom.
It's the only time he can.
Let's see. Can you briefly discuss buying out the money versus in the money? Does somebody want to touch that very quickly?
Out of the money is harder for you to get to your price. Like you need a bigger move. In the money, you don't need as much of a move for it to be good for you, but you're paying more for it, and your premium prices are way more correlated with stock, with the underlying. So a small move down, if you buy like a deep in the money call or pretty decently in the money call. A small move down on the underlying stock will make a pretty big dent in your premium. But if you're out of the money, if you're buying an out of the money call, a small move up will not do anything for your premium. So you got to kind of find that happy medium.
Thank you. And we'll take one more question, and I think we'll wrap up.
I was gonna say I'm about to roll.
Yeah, I know.
Yeah.
I know S. Dot's eyes are rolling. Would you recommend an Iron Condor move? No, we're not gonna touch that.
Yeah.
One
I
more.
think only J-Cat really would have.
Yeah.
No, Jennifer, I'll just answer that real quick.
JCat, have you even ever done one?
An Iron Condor?
Like in 20 years of trading, have you done one?
Well, not in a while, because we've been on an uptrend for the past 12 years. So like those are delta neutral trades. You need a sideways market for an Iron Condor, or you need to. That's too much, man. There's too much there. Like, there's too much.
That's what I think, to JCat's point and to kind of the point I was trying to make, was the Iron Condor is something you can make a ton of money using. And that's kind of why you see it pop up from time to time in like some of the educational materials. Like it really is an amazing strategy. And whoever thought it up first is probably sitting on an island somewhere that they own. But it is extremely advanced and it is extremely clappy. If you don't know exactly what you're doing, you can end up filing bankruptcy because of one Iron Condor. Please,
they're tough.
Please. Like, I know I say that about spreads, but condors and butterflies are, man, if they show those on Robinhood, man, you think my crusade against Robinhood is bad now? Oh, like really, really, folks, please, no condors, no butterflies, please.
So, I think this is a good time to call it. Thank you guys all for showing up. Thank you everyone who sacrificed this Friday night to educate themselves and to really prepare for especially like in this time of quad witching, prepare yourself to and your portfolios to not get clapped. I hope you guys picked up some gems that we dropped tonight. I will send you all the video. There is a lot of learning to do. Shamel, absolutely 100%. And really the learning never stops. I want to thank Mo, S. Dot, and JCat. Once again, please follow them on their social media. I'm going to drop their social media. Actually, can you guys drop your social media links in the chat real quick? S. Dot and I and also JCat are doing one-on-ones. If you guys want more individualized attention, you can reach out to us. If anyone here isn't on Discord and you're on my Twitter, you can reach out to me or any of the guys on Twitter or Instagram. And we'll get you right. I mean, if there's anything that we went through this too quickly, obviously revisit the video, but there's a lot more to it. This was very surface level. And we hope that you guys got a lot of value out of it. And again, thank you for spending your Friday night with us, right? So I'm going to take my last sip of water and I'll see you guys on Monday.
Yeah, thank you so much for joining, guys, and taking time and spending your Friday nights with us. That's really important. We know time's important, so we appreciate it.
Yeah, thanks, guys.
Thank you.
Hey, thank you. Appreciate it, fellas.
Peace, guys.
Thank you all. You are all appreciated. Love the knowledge.
Thank you.
Thank you.
Take care, guys.